Let's bloody go there, children. Come on. Good morning, and how are we doing today? Oh, F4 Phantoms in the house. Rich Bruner, you beat the wife here. All right, Matthew, Sean, what's happening? Over here, what do we have over here? Sam, 10K 4 ways, gotta love it, gotta love it. How you guys doing today? Gotta love it, gotta love it. Today is Thursday. Tomorrow, options are going to expire. Jim Bibby, how's it going there, Jim? Let's get out of here. Let's get out of there. And let's go over to here. All right, that being said, Matthew, Rose, what's happening? Rich, she's busy building her new car. Hey, Teacher Rose, how are you today? Matthew, KG922, cool beans. Matthew, cool beans. Anyway, let's get started. First and foremost, my name is James. This is Dividend Talk, where I show you what I do. I invest in dividend stocks for a safe, predictable, consistent 1% per week. That does come to over 50% per year. I do share all my trades. I actually show you what I buy, what I got, and what my rate of return is at the moment. I share 3 accounts with you. I have about 6 of them. I only share 3. Okay, that gives you a good idea of what you might be able to do also. Nothing's ever guaranteed. Calvin Hill, brother, I always invite you to jump on in and say hello. At that being said, let's just jump in. We have a whole bunch of stocks we didn't get to last night, so I'm going to jump in and see how many I can get tonight before you guys bombard me with a whole bunch of new ones to take a look at. So we left last night with NTAP, N-T-A-P. What I'm basically doing, NTAP, is I take a look at the stocks that you guys suggest. I look for a few certain things. Okay, number one, when I'm looking at the chart, I look at the 1-year chart first. I look for the high of the year, the low of the year. Where was it a year ago? Where is it now? And what is the direction for the year? Well, she went sideways, jumped up, sideways again, up, down, up, down, up, down. Now she's going back up. Great time to jump in. Now, once I see that, I want to automatically jump on over and check the numbers. What do I mean by the numbers? Well, what am I buying it for? That's number one. What is the purchase price at this moment in time? Anthony, I see you sneaking in there, dude. Hamada, cool beans. I want to see what I'm buying it for first. 133.20. Now, what I want to do after that is I want to buy it at the current market price, okay? The 133.20. And then I want to turn around at the exact same time and sell it to someone else. So I'm going to buy it and sell it at the exact same time. Almost, but not quite. I'm buying the stock, and then I'm going to sell a stock option that gives somebody, or I sell somebody, the right to buy it from me for the exact same price I paid for it, or as close as I can possibly get. 133.20, well, the 133 is right here. So if I'm buying it at 133.20, I'm going to sell it for 133. Now, it may look on the surface as if I'm losing 20 cents a share. I'm not. Jill, how are you doing today? I'm kind of curious what kind of car you're building. What are you buying, Jill? Kind of curious. Now, it might look on the surface that I'm losing 20 cents a share if I'm buying it at 133.20 and then I'm selling it at 133. Kinda yes, kinda no. Let me explain. A covered call is the main strategy that I teach here. Number one, it's simple, it's safe, it's predictable, and it's consistent. That's what I'm looking for. I am retired. I don't want to have to go back to work. That being said, if I'm selling it for 133, which is less than what I paid for it, this is what I'm collecting. $4 per share. Well, what does that mean? $4 per share. a 2025 Porsche Panamera. Whoa, Tiffany blue. I'm not crazy about Tiffany blue. I like the electric blue or the midnight blue. Oh, but that sounds cool though. Seth is in the house. Simone, how are you today? Jim Bowman, thanks for that. Okay, so as I'm saying, it looks as if I'm selling it for a loss, but I'm not, because I'm selling it at 133, which is less than what I paid for it, but I'm collecting $4 per share. I'm walking away with $4 per share. That is 3% of my purchase price. So I'm walking away with a 3% profit, selling it for less than what I paid for it. How can that possibly make sense? I had it in purple, but the hubs is buzzkill. Well, I had a BMW. It was so dark purple. Okay, as the sun went down, it actually turned black. So it looked like it was black in low light, but in the bright sunlight, it was extreme deep purple. It doesn't make sense. I love Dory. You're absolutely right. It doesn't make sense. If I'm buying it at 133.20 and I'm selling it at 133, well, how can I be walking away with 3%? This is lavender. Okay. I'm not going to say anything. I can't picture a lavender Porsche. But you're a girl, so it kind of makes sense. Do you worry about the broker fee per contract, or is it minimal? My dear, it is so minimal, it is crazy. We compromise, and I got the Tiffany blue. Well, I like to think that the old hubby's not going to be driving around in a Tiffany blue Porsche. I don't care if it's a Porsche. Tiffany blue is not real manly color. Dude, will Kohl's ever recover from the dump? Nubster? I hope so. I have Kohl's. I have Kohl's at I think 3 or 4 different accounts. I'm kind of hoping it does recover. But anyway, let's get to Kohl's in a minute. What stock are you looking at so I can follow along with what you are saying? Is that Dashul? We're looking at NTAP. Or NetApp. That's what it says. No, I have the, oh, cool. Now, I can get behind that one, an F350. My very first vehicle was an F100. I had that thing for 13 years until it died of cancer. I sent you a DM earlier. I hope you'll be on board soon. Cool beans. He is more likely to drive the Tiffany blue than the lavender. Yeah, I can understand that one. I'll be his passenger princess. Nice. I still would have went with either... I'd like to say black, but black really shows all the dents. Macy's sooner than later. Yep. KHC. JDG 32. What was that one? KHC. We looked at that one last night. KHC. Okay, let's get back to this one because somebody mentioned that it doesn't make sense. Because if you think about it, it kind of doesn't. If I'm buying it at 133.20 and I'm selling it at 133, on the surface, it looks as if I'm losing 20 cents a share, but not so. I'm actually selling my rights for $4 a share. Now, $4 a share, that's my profit already built in. I really don't care what happens to the stock, but as you can see, it is in an upward trend at the moment. So now that the numbers look good, let's dive deeper into the chart itself, because I gotta fix that so I can see it better. So I can see it better. Nope, still not there. I grab right there, pull it over a little bit. Yep, there we go. Get the whole chart now. I want to dive a little bit deeper into the chart so you can see what the chart says, because the chart is telling us what are the buyers and sellers actually doing. When do we think it's too high? When do we think it's too low? Where do we think it's going to go next? That's the key. Where do we think it's going to go next? And does it make sense to do this trade? All right, well, great. Let's take a gander. Let's move this out of the way so we can get a better look at that chart. Now, as I said, the high of the year, 135.28. The bottom of the year, 83.52. Now, the bottom of the year is in February. The high of the year is in mid-July. A year ago, look at it way down here a year ago, 76. She jumps up, goes sideways, jumps up, goes sideways. Shoots right up here, here's the high, and then she pulls back. Well, let's take a deeper look. Okay, the last 90 days. Okay, always looking for the same thing. High, low, where was it? Where is it? Look at the pattern. The 90-day, 3 months, the pattern. Down, up, down, up, down, up, down, up, down, up. Cool. That's what it's doing right now. We're in good luck if Trump doesn't go to jail. Now, Mr. Bubble, I would like to agree with you. Okay, I really don't want to talk politics, seriously. I could talk hours for politics, but I prefer not to. Okay, Dis wants to take a look at U.S. Steel. Okay, we'll take a look at U.S. Steel. Hold tight. This is the last 90 days, which is the last 3 months. Up, down, up, down, up, down. Now, that's great to give us the idea of what the pattern looks like. What are we buying? What are we selling? What is the momentum? Up, down, up, down, up, down. It's like a seesaw. Remember seesaw in elementary school? Up, down, up, down, up, down. Great. Well, she's going up at the moment. Let's take a look at the last 30 days. Because the last 30 days gives us a better idea of what we think is going to happen next. Well, 30 days ago, we're at 125.5. She drops, retrace, drops. Here's the bottom right here, 115. Back up, back down, back up. Here's a new high. That is a 30-day high. I prefer not to buy at a 30-day high. Mandy, favorite dividend ARC. What are your thoughts? Ooh, Mandy. You're not going to like it. ARCC. ARCC. We'll take a look at it if we can get to it tonight. We have a lot of stocks we didn't go over last night, so I did write it down. We are going to take a look at it. It's going to take a while to get there. So I like all the numbers, but I don't like this. It's at a 30-day high. What usually happens on a 30-day high? Well, I tell you what I do when the stock hits a 30-day high. It's going from 116 to 128. That's a $12 increase. That is over 12% increase. Mike, what do you think about LIF? Never even heard of it. So right there, Mike should tell you it's not a good sign if I never heard of it. Now, the reason why it's not a good sign, I've been doing this for 20 years. If it is a good stock for this strategy, I would have known about it, or I'd like to think I would have known about it. Ian, BRP, what? You got to be kidding. Never even heard of that one. BRPHF. I have no idea what the hell that is. All right, let's keep on going. Now, I'm going to pass on this only because, before I do that, let's take a look at the seasonality. For those of you who don't know what seasonality is, right here. The seasonality basically gives you, what is that one? VFF, what the heck is that? VFF. It really amazes me sometimes when I see some of the stuff you guys put your money into. Really does. It amazes me. All right. The seasonality chart. All the way to the left is January 1st. All the way to the right is December 31st. The blue line represents the movement for this year. Okay, sideways, up, down, up, down, up, down. We're right here. I am. This is today, this blue dot. Okay? This red line represents 10 years of average movement. That's what has it done normally this time of year over the last 10 years. Well, from November 1st all the way up to the end of the year is a very slight upward tilt. Okay, put my cart right there. Okay, so my crosshairs right there. So look at that. A nice slight upward tilt to the end of the year. That means it's good for covered calls. It's good for spreads. It's not really good for capital appreciation. Okay, Mike 71, I'm going to tell you right from the top, you really seriously want me to look at JEPQ and JEPI? I tell you what, why don't you take a look at the numbers? Seriously, the numbers. How often have those two increased their dividends? That's number one. Get back to me on that one. Second, find out exactly what the rate of return on those are for this year. And if you tell me exactly what they are, I will do a deep dive into those and I'll tell you everything you want to know. But here's the thing, Mike. Every time I ask somebody to do that, they always come back, no, because it's always a big fat lemon for both of those. Okay? If you want to give your money to a computer and let your computer trade for you, more power to you. Not me. I prefer to do it myself. Austin, what's happening? What about DRS long term? Garrett, never heard of it. DRS. We'll take a look at it, Garrett. Chill fam. No idea. Okay, Mike, seriously. You check those out. Let me know two things. How consistent have they increased their dividends to their shareholders? Okay, what is the consistency? Going up, not going down. So if they go from 11 to 12 to 11 again, that doesn't count. I mean consistently going up, 11, 12, 13, 14, 15, so on and so forth. Hey, isn't my brother's birthday? Can I shout out? Nick, what's happening? Dodd Data Clamp. Okay. Thoughts on ARM? ARM. We'll take a look at it. ARM. You guys got to stop asking because I'm not going to get to anything. LIN? Never heard of it. Now, you guys got to realize one thing. I'm looking for a safe, this is the big word, safe, predictable, consistent 1% per week, meaning I want the company to be consistently profitable. 20 years or more, 2 decades, 20 years or more. Hey, you forgot his last name. It's Nick Gurr. All right, Nick Gurr, happy birthday. Apple, AAPL. Apple's already on my list, brother. We'll be looking at that in a little bit. All right, Lind, never heard of it. Sorry. Mango, I like mangoes. Thanks so much. Bro, I have no idea what that means. All right, I'm going to stop all these. Farley, me started off with 3K. Is there a way I can let my money compound to get higher than 1% in the future? Okay, fairly 2x. Okay, if you're looking for compounding and if you're looking for something more than what I'm offering, you're in the wrong place. How can I become rich with 250 bucks? Time. And you're going to need a lot of time. If you're compounding $200, okay, it's going to take a long time for you to be considered rich. But it depends on where you are in the world. Because if you think of it this way, at $34,000 a year, you're already richer than 70% of the people worldwide. Worldwide, at $34,000 a year. If you get a job at McDonald's flipping burgers, you are richer than 70, wait a minute, is it 70%? 60 or 70% of the rest of the people around the world. Not just here in the United States. Here in the United States, you're poor. But for the world, yeah, you're richer than most people at $34,000 a year. Okay, so enough with the questions. Let's go back to what we're looking at. So I do like NTAP. However, it's a little too high for me here. That's at a 30-day high. I don't like buying at a 30-day high. So NTAP is going to be a no. Ooh, JWN, Nordstrom's. I like Nordstrom's, JWN. Interesting. Okay, here's the high. Here's the low. Here's where it was. Here's where it is. Look at that nice movement. Cool. All right. 22.37. Looks like I can buy it at 22.98. So I'll be looking at the 23s. That's going for 77 cents. That is 3%. I like 3% a week. 3. Damn it. 3% a week is 150% per year. Okay? 3% a week is 150% per year. Who gets 150% per year? Well, here's the number right there. If I buy it at $22.98, I sell it for $23, I'll be picking up 77 cents per share. Now, 77 cents per share doesn't sound like a lot of money, but it is 3% of a $23 stock. All right. Here's your high. $24.93. The bottom, that was back in the beginning of October. 21.12. The last 30 days. Here's your last 30 days. Okay? Last 30 days. 30 days ago was the high of the 30-day period. Here's your bottom yesterday. Okay, so if Nordstrom's bottom was yesterday, today was on the upside. Tomorrow might be 2 days to the upside. And I love 2 days to the upside from a 30-day bottom. At 30-day top, 30-day bottom, what comes next? Think about it. 30-day top, there's profit taking. People take profits, stock drops. After that, people start buying it low and it goes back up again. People take profits, people buy. People take profits, people buy. Well, now it's turning right here. Here's the 30-day bottom. Great. So at this right here, 22.98 by the 23s, let's see what it looks like doing a covered call on it. So let's do it real quick. We're going to change this to a covered stock, and then we're going to do the 23s right there. All right, now I just want to do one contract just to give you an idea what the numbers look like. All right, I'm going to buy it first thing in the morning at the market price. So as soon as the market opens, I will buy it at the market price and simultaneously sell the option. Now, buying the stock and selling the option at the exact same time, the profit is already built in. It's right there, $160 per share. Let me read it to you. Buy one covered call on JWN, that's Nordstrom's. 29 November 24. Well, that is next Friday. Okay, so the option is going to expire next Friday. So whoever's buying it from me has to do whatever they want to do with it before Friday. So if the stock stays above 23 by next Friday, I'm going to make $165 per share. Sorry, per contract. All right. So let's take out the calculator and see exactly what that is. Okay, so the profit right there, 160. And what is each contract costing me? Okay, right here, see what it says? Cost of trade including commissions, $2,140. 2,140 bucks. 2,140 bucks. And that gives me a rate of return of, you gotta be kidding me. Seriously? 7.4%? Shit, I'm gonna write that one down. Nordstrom's. JWN. All right. Now, if that thing pops up tomorrow, okay, we saw the chart. Okay, that's 7%. That's freaking crazy. Let's go back to here. Let's get out of here. Now, remember what I told you about the chart. The 30-day high is here 30 days ago, almost at 25. She drops back up, drops back up, drops back up. Now she dropped right here. Here's the 30-day bottom. What normally happens on a 30-day bottom? Well, people like me saying, oh, this is kind of cheap. I want to buy it. And then it goes back up again. Well, perfect place. Now, you're going to make most of your money in the stock market when you buy low and sell high. Well, you're not going to get any lower than yesterday. Okay, yesterday's a 30-day bottom. Today's higher. Tomorrow, it might be higher, it might be lower. We don't know, but we will find out tomorrow. Okay? All right, that being said, I wrote it down and I circled it. For those of you who've been here for a while, you know what that means. That means I'm buying me some Nordstrom's come Monday. If tomorrow's an up day. Because I like 2 days to the upside before I buy. Okay, bottom was yesterday, today's 1 day to the upside. So tomorrow, if she's up, I'm buying it on Monday. That's me. I'm not telling you guys what to do. That is not a tip. That is not a recommendation. That is just informing you what I'm going to do. Got to have my ginger tea with honey for my throat because I'm not used to talking so much. Alrighty, next on the list. Albemarle. Ooh, Albemarle's, I think, one of the few stocks I actually lost money on this year. Now, I always tell people, when you're starting out and you're a beginner, you're going to lose most of the time hitting the wrong button or selling rather than buying or buying rather than selling. It's the terminology and it's hitting the wrong button. I hit the wrong button this year for Albemarle and I think I lost like 650 bucks. Or may have been more. I don't know. Anyway. Here's the high, here's the low, here's where it was, here's where it is. Look what's going. Up, down, sideways, down, and up. So it's in a current uptrend right now. I can get a third grader in here and say, hey, where's the low? It's right there. Where's the high? It's right there. What direction is it going currently? Well, up, down, up, down, up. Really easy to see. Adults have a tendency to make this more complicated than it needs to be. The reason I say that is I created this trading strategy for my 9-year-old daughter. Now, for those of you that are new here, I haven't introduced you to Miss Wonderful. Okay, where is she? Right here. I'm going to go to my YouTube channel. That's on my social media site. That was my website, the 10-Minute Trader. So we're going to videos. We're going to the oldest videos. Here's the princess.
Hi, I'm JC, and you being part of my internet website called Thingy, which my dad doesn't let me call him that. That's what I do.
I used to give her a hard time for saying that.
You're going to be getting weekly lists of stocks that I'll be trading, and every month you'll be getting 4 lists of stocks that you can choose from that'll help you get the best return on your money.
Okay, that's JC. Here's me. There's one part I like, really funny. Wait, it's coming. Every time I see it, I laugh. I always laugh when I see that because it reminds me, okay, when my daughter was 9, okay, how do you keep a 9-year-old entertained trading stocks? Well, first of all, being 9 years old, okay, it had to be simple. It had to be safe. It had to be predictable, it had to be consistent, and there had to be no way that she could lose. Okay, so for that, I had to come up with 5 really good rules. Rule number 1, never buy something you don't understand, or you don't know, or you don't want to hold on to. If you don't know what the company does, don't buy it. You guys named off a bunch of companies, and I say, what the hell is that? I've never heard of it. And I've been doing this for 20 years, and I only do stocks that are consistently profitable. So if you rattled off something and I said, I have no idea what that is, more than likely it doesn't fit in this strategy. A couple of things. 1, it might not have enough dividends. 2, it might not have the correct options. I only like weekly options. I don't like monthly options. The numbers just don't work for me. All right, I like a safe, predictable, consistent 1% per week. I make no hidden agenda about that whatsoever. If it doesn't give me 1% every week, I don't want to look at it. It's just basically a waste of my time. And I'm sorry if you guys invest in things that you think are good, okay? But if it doesn't fit for me, I'm going to tell you right out. You know, I come from the Gen X generation. We really don't care about your feelings. There is no safe space here. If you get insulted or offended easily, you better leave now. Okay? Do you remember? Who remembers Eddie Murphy's? He did a tour back in the 80s. He says, if you guys get offended, get the fuck out now. I remember that one. He was dressed in that purple leather jumpsuit. I forget what it was. Raw. Eddie Murphy Raw. That's what it was. One of the very first things he said, if you're going to get offended easily, get the fuck out now. All right? All right. So let's keep on going. So yeah, I had to keep her entertained. This was me 15 years ago. Look at all the hair I had. Got the gray going nowadays. Mother Nature's not kind to anybody. All right, that being said, let's get back to where we were. We're looking at Abel Mao. All right. Let's take a zoom into this. Oh, wait a minute, the numbers. 109.25. The 109s are going for 266. Gotta love it. The 110s, 219. The 111s, 159. The 112s, 131. The 113th, I can sell any one of these and still get 1%. Okay? I'm looking for simple, safe, predictable, and consistent 1% per week. There's certain companies I like and certain companies I don't like. Look at it this way. There's 9,753 companies you can choose from. 9,753. How can you possibly look at all of those to find a good one? That's a lot. So I narrowed it down for me. Okay? I like the Dividend Kings. 54 companies that have consistently increased their dividends to their shareholders for 5 decades or more. Okay, there's one company, GPC, 7 decades. Can you imagine it? 70, 70, 7 decades of increased dividends. You know what that means? A dividend is a portion of the profits that the company gives back to the shareholders, and that's you and me. We are the shareholders. When we buy and sell, we own a part of the company. So we are entitled to a share of the profits. That's a dividend stock. Now, on the other hand, Highway, what's happening? Oh, who else we get over here? Michael Sinclair. What's happening, Doc? What was I saying? Don't get old. Don't get me wrong. I'm enjoying my life at the moment, but I am getting older and things. I'm having a difficult time accepting it. I don't feel old. I still get out and play soccer every Sunday. Anyway, where was I? Oh, yes. 9,753 companies. I like companies that are consistently profitable. Dividend kings, dividend aristocrats, dividend champions, dividend contenders, and then I'll throw in Warren Buffett's list. Those 5 lists right there will give you 300, or just right around 300 companies that are consistently profitable for more than 20 consecutive years and have weekly options. When I say I want weekly cash flow, that means it has to have weekly options. If you take a look over here, 22 November, that's tomorrow. 29 November, that's next Friday. 6 December, that's 3 Fridays away. 13 December, 4 Fridays away. 20 December, 5 Fridays away, so on and so forth. Unlike this right here. This is a monthly optionable stock. December, January, March, June, blah, blah, blah. I don't like monthly options. The reason being is there's only 12 months in a year. 12. Okay, which means if I'm averaging 1 to 2% with each option trade, that means with a monthly, I'm getting 12 to 24% per year. Now, that may be great for some of you, but another reason I don't like monthlies is because if this is 30 days right here, see the movement? Down, up, okay? Where do you think it's going to be in 30 days? Well, that's 30 days. Where do you think it's going to be in the next 30 days? If you guess it wrong, you got to hold it for another 30 days. Okay, I don't like monthlies because it's very hard to figure out where is it going to be in 30 days. Because this right here, that is 5 days. Monday, Tuesday, Wednesday, Thursday, Friday. That is easy to figure out. Easy to figure out 5 days. 30 days? No, not as easy. That's why I don't like monthlies. Besides the fact that they don't pay the same. Okay? 1% per week is 50% to 100% per year. Okay, if I'm getting 1 to 2% for each option trade that I do, right? Monthly, 12 to 24%. Weekly, 50 to 100%. Now, I didn't go to college. I admit that. I have no degrees. I am by no way, shape, or form educated to teach you guys anything. I'm not teaching you anything. I'm just showing you what I do. Okay? I invest in dividend stocks specifically for weekly cash flow. All right? I'm retired. I've been working since 1973. I think it's time for me to take some time off. All right? Now, let's keep on going. What were we just looking at? Shit. Hold on. JWN. Okay. So JWN, we already looked at the numbers. Everything looks cool. All right. The bottom of the year, 1368. The high of the year, 2480. And that was back in October. All right. Well, let's look at the last 30 days. That's 30 days right there. Okay. Here's 30 days. 30 days ago, here we are. That's the 30-day high. Your 30-day bottom, yesterday. Oh, yeah. We already looked at this one earlier. Albemarle, that's what we were on, ALB. All right. So let's do this again. Albemarle, 109. It's the 109. Yeah, we said all those look good. All right, so great. Look, high, here's the low. Now it's going up. Great. Let's look at the last 30 days because I'm only interested in what it's done in the last 30 days. Yeah, this is going to be a no. That was quick, right? I don't want to spend a lot of time on anything. The reason being is, well, my time is valuable. Okay? I would prefer watch the grass grow, play with my grandson, not sit in front of my computer. So 30 days ago was a 30-day bottom. She shot up, came back, now she's going up again. It's too far to the high of the 30-day period. Look at all this space down here. Your bottom's here, your top's up here. Too close to the top for me, that's going to be a no for me to Able Mile. Next on the list, Marathon, M-A-R-A. That's a no. Look, 1, 2, 3, very close to the high. Boom, no thanks. See how quick it is? You don't have to spend a lot of time on it. Uh-oh, somebody wanted to look at Coney last night, and it's here. Coney's a big fat no. Reason being, it's a monthly, the numbers just don't work. Sorry. Coney SMCI, I'm not even going to bother. EPD, not going to bother. Coles, somebody wanted to know about Coles. I have Coles, I'd like to know also. Coles was up today. Made a new bottom, but still up today. All right, so let's go back, take a look at Coles for a bit. All right, it's the high of the year, the low of the year. Where was it? Where is it? Look at the direction. Up, sideways, down. All right, up, sideways, down. All right, so last 30 days. Yep, this is going to be a no. Okay, here's your last 30 days. But here's the thing. 30 days ago was the high. She drops down. Today is the 30-day bottom. So what does that mean? I mean, we're going to keep our eye on it and see what happens. That's a big fat no, absolutely, Rob. But here's the thing. I want to keep my eye on Coles. And then I want to listen to the news to see if there's any rumors. Why does it keep dropping? What's going on? Okay, so when she turns around 2 days to the upside and isolates the bottom, see right here, 1 day, here's the bottom right here, 1 day to the upside, 2 days to the upside, but look at the third day. Came down, no. See, I want 2 days to the upside and I want to jump in on the third day. That's where I find the bottom. You guys got to figure out what is right for you. You might say, oh, here's the bottom, I want to buy it. Well, there's a chance of it going down tomorrow. All right, so it's going to be no for Coles, but we are going to keep our eye on it. I'm going to write it down for next week to keep our eye on. It's already written down. Nope, it is now. Coles. Ooh, Aflac. 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 A-F-L. Aflac. Dividend King. Oh, that looks kind of interesting. Here's the high, here's the low, here's where it was, here's where it is. Look what it's doing. Up, down, up, down, up. Cool. Quick, easy. 112. What's the 112 going for? 75 cents. No, thank you. Sorry. 75 cents is not 1%. Now, if you're okay with 0.75% or 0.5%, great, fine, you do it. For me, I want 1% or better, or it's a no. So, it's a no. Target, ooh, I want to take a look at Target because yesterday had a big drop, okay? Big drop yesterday. All right, so here's the high, here's the low, here's where it was, here's where it is. It goes up, sideways, down. Now, something I want to point out to you on Target, which we looked at this afternoon, or this morning in our morning trading group. Right here on this chart. Okay, can we see this chart okay? Okay, what I want you to notice, okay, big gap here, big gap here, big gap here, and another big gap right here. Why am I pointing those out? Well, Rose, how are you doing over there, Miss Rose? The reason why I'm pointing out, look at the big drop it had 2 days ago. Earnings, right there, big drop. Earnings, big jump. Earnings, big drop. Earnings, big jump. They call those black swans. where the gap is so large, it really off skews everything. So look at the big gap from 2 days ago. Okay, it goes from 155 and it drops all the way down to 121. That's a big drop. Okay, all have to do with the earnings report. So we're going to say no to Target because Target has another new bottom, and that was today. Okay, you can see it pretty clear right there. See, it goes sideways and then big drop. Yesterday was the bottom, today was a little bit to the upside. I like 2 days to the upside. One more day to the upside, and that'll be a good time to jump in because you can't get any lower than the low of the year. And it already had its earnings. Okay, so I've learned my lessons with Target. Stay away from the earnings. Because earnings, you got a black swan coming. Happened 4 times this year. It happened 6 times last year. Yeah, I'm staying away from Target when earnings are near. All right, next on the list, SMR. What the heck is SMR? Never a good thing when I say, what the heck is that? That's a no is what that is. Okay? High of the year today? Yeah, no thank you. Wasn't that quick? IBM. Ooh, IBM. Okay, last 30 days. Okay, that could work. Okay, so hold up. Let's take a look at IBM. You ready? High, low. Where was it? Where is it? Where is it going? Up, down, up, down, up. 222. Okay, so the 222s. The 222s are going for 231, which is over 1%. So that looks good. So the numbers work. So let's go back to the chart and take a deeper dive. You ready? A year ago was the bottom, and that was 153.51. She shoots up, goes sideways, drops, shoots up. There's the high of the year right here, the middle of October. From there, she drops, finds the 30 days, finds the bottom, 203.51. Shoots up, pulls back. Now she's going to the upside. Look at that. Okay, up, down, up, down, up. Look at all this space it has up here. So that's a good opportunity. But before we jump into it, let's see what it normally does. What does it normally do this time of year? Well, seasonality. We've already told you what this is. Okay, to the end of the year, this thing has a very slight upward tilt. Okay, that's 10 years worth of data. 2014, 15, 16, 17, 18, all pile up on top of each other to give us an idea. How does the stock move from January all the way to December? For the whole year, that's what it normally does. Just slightly to the upside towards in the fourth quarter. And we are in the fourth quarter. Actually, we're halfway through the fourth quarter. Let's go back to here. Standard, and let's go back to here. So what does it look like? Well, let's do one. 222. You ready? Here's Johnny. Let's go. Covered call. We want the 222.50s. There it is right there. Just do one contract at the market. And here's what it sounds like. You ready? Buy one covered call IBM 100s. Those are the weeklies. 29 November 24, that's next Friday. Means the option expires next Friday. So if the stock is above 22.50 next Friday, I get all my money back and that nice fat premium of $260 per contract. The 222.50 call option against the stock at the market to open. That's all that means. The maximum profit on this one is $260 per contract. But wait till you hear what one contract is going to cost you. Okay, bring it up. Okay, 260 is the profit for one contract. One contract is going to cost, you ready for this? $21,990. Ouch, but you're only getting 1.1%. Okay, well, here's a couple questions you need to ask yourself. Question number one, do I like IBM? Wait a minute, that's question number two. Question number one is, does it make sense? Seriously, does it make sense? Buying a stock, IBM, selling somebody else the rights to buy it from you for the exact same price and walking away with a profit. Because that's basically what you're doing. It's like, think of it this way, okay? For those you might not understand, see if I can give you a metaphor. Now, I'm sure we've all been to a party before. I'm sure you've heard this. Somebody jingling the keys at the door, say, hey, I'm running the store. Anybody need anything? Yep. Pick me up a 6, throw them a 20, keep the change. There you go. You're buying a 6-pack of beer, you bring it back, you give it to the guy who wants it, and he tells you to keep the change. It's basically the same thing. You're buying the stock, okay? $222.40. You're selling it for $222.50. You make 10 cents per share, but you're also collecting this. $260.50 per contract just for going to the store and picking up a 6-pack. Same thing, but you're doing it with stocks instead. Okay? It's like you're buying a stock, $222.50. You're selling it $222.40. You're selling it $222.50. You're collecting this premium kind of as a favor, like going to the store and picking up something. Anyway, that's the metaphor I like to use. All right, let's get rid of that. Let's get back to where we were. Where we were. La, 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 la. All right, done. Okay, all the way done. So I like IBM, but the number to get 1.1%, it's a big chunk. Okay, we look at Nordstrom. Nordstrom's giving a better rate of return and it's costing less per contract. Okay, so it's not always just the company, because you can find every week there's 3, 4, 5 different companies that look good. Now, I only buy 1 or 2 companies every week. Well, I get 6 accounts, so I'm buying more than 1 or 2. But for the most part, in my own personal account, I'm buying 1 or 2. All right? But I got to look through at least 10. Now, when I say I got to look through at least 10, here's what I do. I take all my stocks, the ones I just told you about, the Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. You take those 5 lists, which you can get on Google. You go to Google, do a Google search. Dividend Kings list 2024, Dividend Aristocrats list 2024, so on and so forth. Every year, that list is updated. So next year, okay, which is what, 6, 7 weeks away, I got to go in and update all my lists, because there's somebody somewhere, okay, I don't know, maybe he's in Cleveland, maybe he's in El Paso, I don't know, but there's someone somewhere updating that list every single year. Every year there's a new Dividend King. Every year one falls off. Every year there's a new Dividend Aristocrat. Every year, so we always update the list every year. Okay, and if the company is still on the list, then I know they are consistently profitable, because you can't be a Dividend King if you cut your dividends. Even once, if you cut your dividends, you get tossed off the list. Plain and simple. Okay, I know of Yum Brand was tossed off the list. I think 3M was tossed off the list recently. Can you imagine that? 62 years of increased dividends, and this year they cut the dividends? Then they got tossed off that list. You know how long it takes to get to be a Dividend King? And when you have people like me, older, retired, relying on a steady income, what do they call it, fixed income? Yeah, we look at the Dividend Kings and the Dividend Aristocrats and the Dividend Champions, because we want safety, consistency, and safe, simple, predictable, consistent. Yeah, all that kind of nice, neat, fun stuff. All right, first thing I do, I take all those stocks and I throw them into the calendar based on when they pay their dividend. And the reason why that is because when they pay the dividend, the stock goes up in value before the dividend. So if I like Nextera right here, okay, and it has the 22nd of November. Wait a minute, that's tomorrow. Wait a minute, no. 11/21. Where are we? Oh, that's November 23. I'm in the wrong one. Okay. 11/21. Here we are. Next year, it's tomorrow. All right. So if I wanted to buy this one, I got to buy it before the EX date, 2 weeks on a Monday. Okay, which is the 4th. So if I want to buy this stock, it's going to go up in value before the 22nd. So if I go buy it here, that gives it 3 weeks for it to move up 1%, because that's what I want to do. Buy it at the market on the 4th. Whatever the market price is at the opening on Monday, that's where I want to buy it. I honestly, and this is hard for some people to grasp, I really don't care what it opens up at. If, okay, if the chart looks like this, okay, up, down, now it's going up. That's a perfect time to jump in as it's going up. See the bottom right here? Here's the bottom, 1 day, 2 days to the upside, that's where I want to jump in right there. Bottom, 1 day, 2 days to the upside, that's where I want to jump in. Okay, I can't see the one over there. But that's all stocks do. They go up, they go down, they go up, they go down, they go up, they go down. Okay, so if I like a company like this and she's coming down, hits the bottom, bounces off and goes back up again, because that's what stocks do. Here's IBM. Up, down, drop, up, down, up, down, up, down, up, down, up, down, up, down, up, down. Take a close look. That's all the stock does. Okay? Down, up, down, up, down, up, down, up, down, up. If you like a company, keep your eye on it. Most people spend more time planning a family barbecue than they do in their personal finances. How long does it take to look at this? Let me give you a couple quick ones. Ready? Let's see if you can follow this. Okay, ready? High, low, was, is, what's the direction? There you go. Great. Now let's look at the last 90 days. Last 90 days, there you go. High, low, was, is, direction. Up, down, up. Cool. Now the 30 days. 30 days right there. Down, up, down, up. Not even 30 seconds to go all through those three charts. Then I want to jump to see the seasonality. Seasonality, whoops. Yep. There you go. Here's this year. Here's the last 10 years average. This quarter right here, October to December, that's the fourth quarter. Sideways drop. We're right here right now. Now she's going to go up. It's really difficult. Once you got that figured out, you go to the trade. Well, I can buy it at $222.40. $222.40 per share. Well, the 222.50s are the closest, and it's going for $231. If you don't know how to do percentages, you see where it says right here? Okay. 222.40. You take the decimal point and move it over to the left 2 spots. Okay, so now 1% is $2.22. That's 1%. Right? So what's the 222 going for? 231. 231 is higher than 222. It's actually that simple. So everything looked good on this chart. Great. I'm making more than 1%. The stock is in an upward trend. It takes less than 2 or 3 minutes to isolate that one. So if I'm on my calendar, okay, this is this week right here. These are the only companies I want to look at. Walgreens, Chevron, Hershey's, UPS, Aflac, Target, Archer Daniels, and Nextera. That's it. I don't want to look at Kinder Morgan. I don't want to look at Ford. I don't want to look at Siri. I don't want to look at Baxter. I don't want to look at Newmont. I don't want to look at Johnson & Johnson. I don't want to look at Apple. I don't want to look at any of those. Because the only thing up for consideration are those companies that have a dividend coming up in 2 weeks. Because I know from doing this for 20 years that 2 weeks before the EX date, that's those little green dots, the stock has a tendency to go up in value. So if I'm buying it at the market price and I'm selling it at the exact same price I paid for it, and the premium that I collect right there, the 231, is more than 1% of the current purchase price. Okay? I know the numbers are right. Okay? I know the dividend's coming, and I know by looking at the chart, okay, by looking at the 1-year chart, by looking at the 90-day chart, by looking at the 30-day chart, and then the seasonality, everything is pointing in that direction. So for me, this is a yes. It's actually that simple. You take all the companies you like. Now, like I said, there's 9,753 companies. Half of those companies pay out dividends. The other half take all their money and put it back into the company for capital appreciation. If you're here looking for capital appreciation, buying a stock and having to go higher and higher and higher, or you want to hold long term, you are in the wrong place. I'm going to save you the time because you're basically wasting your time being here. That's not what I do. Okay? I don't do that. I don't show that. I'm just looking for something that's coming up next week. If it's coming up next week, I can make 1% on it. Great, that works for me. All right, I'm 60 years old. I graduated in 1982. Like more than 1/3 of my classmates are no longer here. What makes me think that I'm going to be here another 10, 15, 20 years? No, I'm not doing anything for 15, 20 years. I'm doing it for next week. And then I'm doing it for the week after that. I'm not looking for 5, 10, 15 years down the line. No, 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 no. I want to live my life now here. Because as the older I get these notifications, so-and-so passed, so-and-so passed, so-and-so passed. I mean, he was my best man, he was one of the best men at my wedding. He's no longer here, okay? Wendy, she was with my best friend at prom, okay? The other kids, we hung out together in the hallways, going back and forth. They're no longer here. What makes me think that I can put money into a stock, wait 15, 20 years for it to go up? No, no, no. I want cash flow. If you're here for capital appreciation, you're in the wrong place. I can show it to you, but I don't want to because that's not what my focus is. My focus is a simple, safe, predictable, consistent 1% per week. It allows me to live my life the way that I want, come and go as I please, and sleep as late as I want. Not do anything if I want. I take Saturdays and Sundays off because there's no trading in the morning. Now I have a morning trading group. Monday, Tuesday, Wednesday, Thursday mornings we jump in. Fridays we jump in just before the market closes because we want to make sure all our positions are going to be good for next week and we're not going to lose any money. Okay, so Monday I pick all my stocks. Tuesday, Wednesday, Thursday I look at them just to make sure they're okay. Friday I do my balancing. Do I need to buy something? Do I need to adjustment? What am I doing for next week to make sure I don't lose anything? Albert! I know it's not on your list, but any chance you want to look at NEM? Actually, NEM is on my list. Okay, Newmont is on my list. Let's take a quick look at Newmont. I like Newmont. It pays nicely. Let's see how quick we can do this. Okay, ready? Who's going to pay attention? Somebody got a time clock? Somebody got a stopwatch? Let's check and see how quick I can do Newmont. NEM. NEM, help me, NEM. I'll get you, my pretty. All right, anyway, Newmont, here we go. High, low, was, is, what's the direction? Up, down, up, down. Ooh, big turnaround right there, cool beans. Currently at 43.34. The 43.50s, 49 cents, that works great. A year ago, we're at 37.65. The bottom was 29.35. That was back in February. The top 58.24. That was 30 days ago. Check it out. 30-day high, 58.29. 30-day bottom last week. Look at this. 1, 2, 3, 4, 5 days to the upside. Look at all the space there. That looks freaking awesome. What does the seasonality tell me? Seasonality tells me, okay, I can deal with that. Okay, a little bit of jump up, sideways, dip towards the middle of December, which means we got 4 weeks to play with this. I'm only looking for 1%. I can jump in with 1% next week or the week after and be done and over with. Great, looks good. Okay, so 43.50s, let's go over to covered stock. The 43.50s right there. One contract, boom, 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 ba-da-doom, whoop, right there at the market. There we go. Here's Johnny by one covered call, NEM 100s. Those are the weeklies. 29 November 24th. That's next Friday. The 43.50 call against the stock at the market to open. My profit is going to be $70 per contract. Get up my calculator. Clear that, 70 bucks. And what is it costing me? The cost of the trade plus commissions, 4,280. 4,280 equals 1.63. That is a yes. Everything looked good. The 1-year chart, the 90-day chart, the 30-day chart, the seasonality chart, the numbers, everything looked good. Do I know who Newmont is? Number 1 question, does it make sense? Number 2 question, do I like Newmont? Number 3 question, do I like Newmont at this price? Number 4 question, can I picture myself holding on to Newmont as long as it takes until it hits my target. What's my target? Well, my target is 143.50. How long is it going to take to hit 143.50? It might be this week, it might be next week, it might be the week after. Can you picture yourself holding on to it? Now, what's the nice thing about Newmont? Well, they consistently increase their dividends. That's what I'm looking for. Worst case scenario, the company's been around for a while, they consistently increase their dividends. Fine, it works for me. Ask yourself the questions. Does it make sense? Do I like this company? Do I like it at this price? Can I see myself holding on to this no matter what happens until it hits my target? Most people buy a stock and hold on to it for decades. Great plan. Old school. That doesn't work for me. I can't live off of 4, 5, 6, 7, 8, 10, 12% per year. I can't. Okay? I would have to go back to work. I've been working since 1973. I have no desire to go back to work. Don't get me wrong, I could, but I have no desire to. I got a question. Albert, thanks, James. See you Monday on the Zoom. Cool beans, Albert. All right, that being said, it didn't take more than 2 or 3 minutes to isolate that stock. That was 34 seconds for Newmont. Hey, thanks, Matthew. I was just wondering if someone was actually watching that one. But thanks. It doesn't take that long. Number one, choose what companies you like. 9,753 companies. Choose the ones you like. I personally, I like companies that have 2 decades worth of increased profits. Now, if the dividend is a portion of the profits the company gives to the investors, that's you and me, it only makes sense. Common sense? Not really that common. They should probably teach it in school. You know, common sense, up, down, left, right, hot, cold, yes, no, bad, good, bright, dark, you know, common sense. If the company consistently increases its dividends, and a dividend is kind of like algebra, and a dividend is a portion of the profits the company gives to their investors. Well, if they keep increasing that, logic, reason, and common sense tells you they got to be consistently profitable in order to do that. You can't keep increasing the money to investors if you're losing money. That just doesn't work. That's just not good business sense. So if they're profitable, they increase the profits to the shareholders. That's you and me. Those are the only companies I like. And there's only about 300. 9,753. But there's only about 300. Only about 300 that actually fit. That's all the ones I like. So when you guys ask me about LIND, never heard of it. The reason why you never heard of it, let's check it out really quick. Because that's the first one. It's on the screen right now. Delete. Let's go back to here. Let's get rid of this. Let's get back to here. Back to the beginning. All right. LINDE. We can't find the ticker symbol. Well, what do you think that means? That means it's a freaking no. Okay? XRP. XRP. Okay? Whoops. XRP. Okay? XRP. Can't find the symbol. That means no. What the hell are you guys investing your money in? All right, I got a question here. Farley. Uh-oh. I got all these questions. Oh, wow. I missed all these questions. Holy cow. All right, where are we? Holy cow, I missed all these questions. Sorry, you guys. Mike, JEPQI. Now, Mike, I'm kind of curious. Did you actually look at the numbers for JEPQ and JEPI? Okay? If you look at the numbers, I'm dying to hear what you got to say. Because more than likely, it's going to be a double hell no. Chill fam, no idea. All right. Donald the Camp. It's my brother's birthday. Yep, we already did that one. Thoughts on ARM? ARM. Okay, interesting. Okay, it has weekly options. Great. Well, let's see how consistent they are with their dividends. No. Let's go to Yahoo Finance. Okay, ARM. Give it a second to upload. Here we go. ARM. There we go. Give it a minute. This is Yahoo Finance. This is where I get my financial information. I've been using it for over 20 years. I'm going historical data. Historical data tells me all the high, the low, the open, the close, blah, 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 all the historical prices. All right, dividends only. Oh, look at that. There are no dividends at this time. Why are you showing me a company with no dividends? Okay, Nick, I never even heard of Mango. M-A-N-G-O. Nope, no such thing. Okay, Mango's a no. Apple is on the list. L-I-N. What the heck is L-I-N? L-I-N. Lind. For dividends. Maximum amount. Oh, check this out. 2013. All right. All the way down to 2000. Check that out. That's over 20 years of dividends. Check it out. 4, 5, 6, 7, 8, 9, 10, 14, 15, 18, 25, 30, 38, 40, 45, 50, 55, 60, 65, 72, 75, 79, 83, 88, 96, 106, 117, 128, 139. We have a winner. Well, let's check it out. L-I-N. 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 Lynn Place. That's why I never heard of it. It's a monthly. So they have over 20 years of increased dividends. Awesome. However, monthly options just don't work for me. Okay, 1 or 2% every month does not work. I'm terribly sorry, 8 Tim Hot. Sorry, doesn't work. Lind, nope. La 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 la. XRP, yeah, no. Farley, 2X. Me start off with 3,000. Is it a way I can let my money compound to get higher 1% in the future? Yes, there is. But you can spend a lot of time in front of the computer. How do I become rich with 2,000, with 200 bucks? You move to a desert island where there's nobody, and you'll be the richest person there. Sergio Dub is going to the moon. The owner of the... Okay, dude, I don't do cryptocurrency. Sorry, Sergio. Truth, time, great answer. Yep, you like that one? Oh, no spills. Do you trade daily options on SPY or Qs? Okay, dude, no spills? Seriously, dude, if you're a day trader, you're in the wrong place. Seriously. But Spider and QQQ, they don't fit. If you take a look at the rate of return that they have this year, yeah, no. Dawn, no coins. And Elon controlling the currency wing. Cool, I like that idea. Net, Logan, net. What the heck is net? N-E-T. Cloudflare, never even heard of it. N-E-T. Okay, Cloudflare. No dividends, no thank you. Isn't it simple? No dividends, no thank you. No options, no thank you. No weeklies, no thank you. It's really not that difficult. Duke, XRP, yeah, no, sorry. 20 years. See, something about 20 years of profits you guys aren't getting. Okay, net, probably not. ORC, probably not. ORC. Yeah, double hell no. Don't you guys listen? Monthly options? No. Absolutely no. ORC's a no. XRP, I already know that's a no. K, what the heck is K? Oh, Kellanova. Interesting. Well, what are we looking at Kellanova for? K. Oh, and they do have dividends. Check that out. Really? Okay. 97, 98, there's 2000, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. They're all there. 17, 18, 19, 20, 21. Okay, well, they're all there. Why haven't I ever seen this one? Let's go back to 2000. All right. 2000, 23, 24. Uh-oh. 1, 2, 3, 4, 5, 6, 7. Uh-oh. What the heck is that? Okay. 2000, 24. 2001, 24. 2002, 24. 2003, 24. 2004, 24. 2005, 24. Dude, that's 6 years to no increase. You seriously want to put your money in a company that it's not profitable for 6 years? Seriously? Okay. 26, 27, 29, 32, 35, 38, 40, 41, 43, 47, 51, 53, 54, 55, 56, 57. Okay. So they get 10 years of increased dividends. But the first 10 years are terrible, in my humble opinion. So let's take a look at K. Okay, so K at the moment, here's the high, here's the low, here's where it was, here's where it is. Big jump. What the heck's going on? Oh, that's Kellogg's. Kellanova. Kellogg's, okay. 81, 84, the 82s. Wait a second. Wait. Is that right? Am I reading that correctly? Can somebody else read that for me? If I'm buying it at 81, 84, and I'm selling the 82s, and the 82s are offering me 0 from 0 to 490, that just doesn't make sense. That's no. Hell no. All right, Trevor, Dub, D-U-B. Never heard of it, D-U-B. And you apparently don't listen, dude. Dub, D-U-B? Yeah. Can't even find that symbol. Hell no. NTR. I've heard of NTR. NTR. Nutrien. Okay. NTR. Okay, NTR is going to be a no. Here's the reason. Fairly 2X. Dividends, 2018. Okay, is that 20 years? Dude, seriously. I'm going to go back to 2004. 2004, you'll have 20 years. 2018, what is that, 6 years? No. Nope. Circle it, baby. Hell no. The numbers got to be right. KG. Do those numbers change after hours? Like, can you set a pre-trade for the morning and the numbers change? Absolutely. Okay, see, the market is closed at the moment. So all these numbers are what you call static. That means they put them up and they don't change overnight. As soon as the market opens at 9 o'clock, 9:30 in the morning, these numbers will all change. And they will change every 2 or 3 seconds. It's like throwing a dart at a moving train while you're on a horse blindfolded. Where'd that come from? That came from Star Trek. Yeah, you're on a horse. You're on a horse throwing a dart blindfolded at a target on a moving train. Yeah. All right. Hey, bro, what's happening? Mara and Riot. I should be working. Yeah, cool beans. I like Mara and I like Riot. Mara, M-A-R-A. First thing I want to see, high, low, is, what's the direction? Up, down, up. 24.30. I'm looking at the 24.50s. 185. That's a nice premium. What is that? That can't be right. Okay, 24.50 on 185. That's 4, 5, 6, 7. That's 7%. Wow. All right, let's zoom in a little bit closer. A year ago was the bottom at 1039, topped out at 34. Drops, go sideways. Here we go the last 60 days. Up, down, up, down, up. Uh-oh. Uh-oh. Last 30 days. Yeah, I'm going to have to pass on this one. Okay, the high of the 30-day period is right there. Look where we are right now. That thing's going to go up just a little bit more, turn around, come back. Sorry, dude. A little too high. Riot. R-I-O-T. Now, don't get me wrong. I do like Marathon. I actually own some Marathon. All right. Riot. High, low. Where was it? Where is it? Up, down, up, down, up, down, up, down. Yeah, this is going to be a no. Look at it right here. Okay, here's the high here. It's actually coming down. Get all this space down here. This thing's going to continue to drop. Now, that's not guaranteed. I'm just giving you my opinion. Okay? You should really do your own due diligence. If you like Marathon or Riot, the numbers and everything looks good to you, hey, that's your thing. 77 main reasons. Cool. How you doing, dude? All good in the neighborhood, I hope. So that being said, Marathon and Riot, I actually own both of them, but it's not actually going the way I want. KG wants to look at Raw, R-A-W. Never heard of it. Okay, Raw has no options. That's going to be a no. What did I get? Oh, Khan gave me a rose. How nice of you. Cool beans. Howdy, Dusty. How you doing? Brian, Eddie Murphy Raw. Absolutely. Now he comes on. I remember it. Any y'all says, y'all motherfuckers get inside. Wait. What did he say again? Hold on. Those of you get offended easily, you might as well get the fuck out now. Anyway, Coles. We already did Coles. TD for long term. TD. No. Sorry, dude. TD monthly. I don't like monthlies. If you want to buy it for the long term, I hope it works out for you. I really do. Okay, Anthony, Citigroup. Ooh, I love Citigroup. I do. Where? Right here. Anthony wants to take a look at Citigroup. I like Citigroup. Citigroup is on my list. Citigroup is going to be a no. Look at that. She jumped up after the election, going sideways. Look at that. Too close to the high. It might look good in a couple of weeks. Okay, user 001197811, whatever. I'm going to call you Phil. Okay? Phil, you want to look at GPC, Genuine Parts Corporation? 70 years, 7 decades, 70 years of increased dividends? They're a no. It's a monthly optional stock. I don't even have to look at it. I've been doing it long enough to know it's a no without even looking. What percentage of your bankroll is liquid versus in stocks that went down after you bought? Well, that's an odd question. 98% of all my money is invested at all times. Now, a lot of people say don't do that. I say, why the hell not? Because I do covered calls every single week, whether the stock is up or whether the stock is down. I have, hold on a second. I've got Walgreens. Let's pull in Walgreens right there. I've got Walgreens, okay, at 941, okay? 941 Walgreens. Okay, Walgreens at this moment is at 830. Less than what I paid for it. But I am going to sell the 9s next week, which is less than what I paid for it. Well, why am I doing that? Well, because I want cash flow. I don't care that it's lower. I look at it twice a day. Now, I don't do it on purpose. Okay, I don't look at the stocks twice a day on purpose. In the morning, I have a morning trading group. Like a bunch of people, we get together and we look at stocks and we make trades. And we're all there to help each other out, looking for a simple, safe, predictable, consistent 1% per week. Now, we do a lot more strategies there than this one. This one I give away for free at night to you guys. It's simple, it's safe, it's predictable. If you do it right, now I'm not promising you this. I make over 1% a week using this particular strategy, the one I'm sharing with you right here. It's simple. I created it for my 9-year-old daughter back in 2008. It's been working for me since 2008. All right? Now, I'm not guaranteed it's going to work for you because everybody's different. Okay? There's a lot of people. It's strange to me that you have the profit right there in front of you. The stock is moving up and you want to keep going up with it. Why? Because when it goes up, what the hell do you think is going to happen? People are going to take profits and then it's going to drop. In my humble opinion, if you don't know where your profit is, because when you jump in, no matter where you jump in, you should have somewhere in your head where you want to get off. Because if you say I want to buy and see how high it goes, that's not investing, that's gambling. Okay, I buy, I already know where I want to get out. I want to get out after 1%. I don't care if it quadruples overnight. Honestly, I really don't. I'm looking for a simple, safe, predictable 1%. Whoever bought the option from me, if it quadruples overnight, good for them. Yay, okay? I'm looking for my goals. My goals is to do whatever I want, whenever I want. In order to do that, I need a consistent cash flow. I'm not looking for appreciation. Seriously, I'm not. All right. So, yeah, 98% of all my money is invested at all times. I do a covered call every single week, even as the stock is going down. See, I got it right here, 941. I sold the nines. That's less than what I paid for it. What did I bring in? I brought in 5 cents a share. That's a little more than 0.5%. 0.5% a week is 24% per year. I can live very comfortably with 24% a year. I prefer 50% a year. But here, this one got me 0.5%. Home Depot and Harley Davidson, well, they got me over 3 or 4%. That makes up for this 0.5%. All right, that being said, let's get back to where we were. All right. No. Did I just get booted off of that? I did. Damn it. I got booted. Every once in a while, Thinkorswim updates. So apparently I got booted off of that account. So let's try another one. All right, we're going to do this account. It happens. I get 6 different accounts. I don't mind. We can just go to the next one. So Citigroup, huh? Let's take a look at Citigroup. I love Citigroup. But yeah, it's going to be a no. Look where it is. It's way too high. So once it comes down here, I'll take a look at Citigroup in another 3 weeks. Sorry. XRP is going to be a no. Listen to what he's saying. Dusty, thank you. XPO, what the hell is XPO? How do you think that's going to turn out? What the hell is XPO? XPO. Okay, apparently you weren't listening. Monthly options. See, this boggles my mind, okay? Tuck, if you're an investor, if you're putting your money into something and you have no idea what the hell it is, when I say weekly options, you apparently don't know what the hell you're investing in, because this is a monthly optionable stock. I already told you earlier, weekly options only, and you tell me to look at this, it's already automatic no. You're wasting our time. Terribly sorry. I have no disrespect whatsoever, but you are. My most valuable commodity that I have in possession is my time, and you're wasting it. I prefer anyone who wants me to take a look at a stock, please know what you're investing in. If you have no idea what you're investing in, you shouldn't be investing. XLM, same thing. XLM. Okay, can't find that symbol. That's a no. Stopping by to say hello. Mark, how are you today? J Ren, how are you? High Techs, charity lessons. How are you doing? Big Marty, what's up? Super quick, what do you have written down so far? I'm joining late. That's what I got written down so far. Take a quick picture of it and you can figure that one out. What do I think of XRP? Go again, no idea. I don't do XRP. Okay, Dusty, we already looked at Coles. What percentage do you have? Do you take your winnings and move on? 1%. XRP has nothing to do with dividends, gains, cool, weekly. Anyway, we can see your portfolio. Well, I can show you 2 of them. One I just got kicked off. There's one. There's the other. Alrighty. Oh, Hormel. Ooh. Good. Thanks for asking. Take it easy. All right, Mark. All right. That's a money grab from Wall Street for Target. Anthony Garcia. Did you actually see that? Hold on, Anthony. I want to show you something. You might be able to appreciate this. Come on. All right. Let's go to charts. Oh, wait a minute. Before we go to charts, let's put in Target, TGT. Okay. Here's the target for chart. Here's chart for the target for chart. Here's the chart for target. But before that, I want you to keep an eye on one thing. Do you see this right here? The bid and the ask? Okay, we were looking at that earlier today. There is a 3 cent difference between the bid and the ask. That is what's called the spread. Let me explain the spread to you for a second. The spread, I'm going to paint a picture for you. You ready? Now, we all have a corner store, Circle K, 7-Eleven, Quick Stop, Quick Mart, whatever it is. There's a corner store right down the street, convenience store, sells you anything you need. Somebody owns that. Let's call him the market maker. He will go and buy a gallon of milk. Let's say he pays $3 for a gallon of milk. He will sell it to you for $3.50. He pays $3 for it. He sells it to you for $3.50 because you can't go to the farmer and buy the milk from the farmer. You have to go to the store and buy it from the store. Okay? For the convenience store, he buys it for $3. He sells it to you for $3.50. His profit, 50 cents. That's the spread. Stock market, exact same way. The spread, 3 cents. Okay? Buys it for $120.01. He sells it $120.04. 3 cent spread. That money goes to the market maker. So keep that in mind, all right? Now, this is the 1-year chart for Target. Right down here is the volume. How many shares are traded on average on a daily basis. So let's put our cursor right there and try to get the average. So the average is right there, okay? 4 million shares per day, okay? Anthony, you ready? The average for the whole year is 4 million shares a day, okay? And the market maker is making 3 cents per share. That's his profit. So get the calculator. I'm going to make this larger. You ready? See how nice and big it is? Let's clear this out. Now, we're going to take that 3 cents and we're going to multiply it by 4 million because that's what the average trades, how many stocks trade on average. Okay? 4 million shares multiplied by 3 cents is going to equal $120,000 a day. That's what the market maker is making. A day. $120,000. That's a shitload. Now, let's bring this down. Let's zoom into here and let's take a look at this right here. That big, huge drop. We're talking about a money grab. Are you ready for this? It was at 156 on the 19th. The very next day, it drops all the way down to 120. Why? Because they had an earnings report. See right here? Right there, those little right there. See the dividend, earnings conference call, blah, blah, blah. All that, right? That's the earnings. Okay? What happened on that day? 65 million shares traded on that day. Hold on, you're going to love this. Okay, we're going to take the 3 cents per share, where is it? 0.03, 3 cents per share, and we're going to multiply it by the 65 million shares that traded that day. The market maker on that day made $1.95 million. He averages $120,000 a day. He gets that little piece of paper saying, oops, we didn't hit our target. Sorry. Yeah, he walks away with $1.95 million. You want to talk about a money grab? What do you think of that? Now, what they don't tell us, okay, let's get rid of that, is this big drop here from the 156 down to the 120. Okay, the 65 million shares that traded, were those buyers or were those sellers? We don't know. All we know is 65 million shares traded that day. One Jet Lee, what's happening? Hertz Drew, what are you doing? Welcome to the show. Woohoo, let's go. So anyway, money grab. Anthony, what do you think of that? Is that a money grab or what? Okay, the stock's doing fine. Okay, he walks away at 1.2 $120,000 a day. And then he gets a piece of paper saying, oops, we missed our target. Well, now he walks away with 1.9 million. What a freaking deal. That's a money grab and a half, dude. All right, Ann wants to take a look at Hormel. HRL. In case you didn't know, Hormel, HRL, has been around for over 100 years. They are a dividend king, which means they have increased their dividends to their shareholders for more than 5 decades. That's over 50 years. Some of you people in the audience aren't even 50 years old. All right, here's the high, here's the low, here's where it was, here's where it is. Easy. Up, down, up, down, up, down. Look, it's just turning right here, right now. See that little turn? We're going to zoom into that in a little bit. But before we do, we want to check the numbers. Is it even worth our while to take a look? It's currently at 30.55. The 30.50 is going for 10 cents a share. We can all say it at the same time. Ready? 1, 2, 3. Hell no. Why the hell would I want to get 10 cents, which is 1/3? 1/3 of a percent. Not 1%, not 0.5%, but 1/3. Yeah, no. Sorry, kiddo. The numbers just doesn't work on that one. Big Marty. Target dividend payout is on December 10th. $121 per share. Yep, I know that. Oh, one thing I didn't show you about Target, Marty. Check this out. Okay? Here's the bottom. Here's the top. Well, this is what it was a year ago. She went up. She came down. She went up. She went sideways. And then she did this big drop here. I'd like to zoom into that big drop, because you ain't going to get any lower than the low of the year, which was yesterday. Today was higher than yesterday. I like 2 days up on a bounce. Okay, this thing drops, it bounces. Once it bounces, it goes back up again, back to this trading range again. It's not going to take long to get back to there. Let's go here. Let's go here. Let's go boom, 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 boom. Okay. Here's the 1-year chart for Target. Here's your first big drop, or your first big move right here. Okay? She goes up, big jump, goes up, comes back down, same area, okay? Then she drops, stays in the same area, then big up, same area. Then she comes back down, she's going to go back up and goes back to that same area again. It's just a matter of time. If you like Target. That's the big question. Do I like Target? I'm looking at Target to get one more day to the upside. Okay? Bottom, today was higher. If tomorrow's higher yet again, it would be perfectly ripe for Monday. So Target is on my list for Monday. Oops, come on. TGT, and I got it circled just in case. All right. Almighty Bull, how are you today? You want me to take a look at Tesla? No. The reason why I'm saying no to Tesla, does anyone else besides me know why I'm saying no to Tesla? All right. Plain and simple, Tesla doesn't have dividends. Tesla's a no. Sorry. This is a dividend investing strategy. Specifically, if you take a look right up here, the top left-hand corner, what does it say? Dividend stock talk. Dividend stock talk. Tesla has no dividend, so why are you asking me to take a look at it? You're not getting much sleep, are you? Hey, Erica. Eric, you ready for this? Eric, for you buy. Okay, Eric, you ready? Who knows where this comes from? I'll get plenty of sleep when I'm dead. But you're right. I don't sleep very much. What's the point? No dividend on Tesla. Thanks, KG. Cyril. Not chill with the orange profile is the skyrocket. Going to skyrocket. I have no idea what that means. Nope. Calm. CLME. What the heck is that? CALME. Oh, calm or liberative. Yeah, we can't find that. CS. Who wants to take a look at CS? User 63, no options. Dude, come on. Would you guys pay attention? What's the difference between one contract at 20,000 versus 10 contracts at 2,000? Same 1%. You're absolutely correct. You're absolutely 100% correct. If you're making the same amount of money on Macy's as you do on Tesla or you do on IBM, what's the point? Bro needs to get some sleep. No, I'm perfectly fine. I'll have plenty of sleep when I'm dead. No slip, no spills. He does not, no consistent dividends. Thank you. Ooh, Jill wants to take a look at Micron. MU, I like Micron. Ooh, look at that. Jill, you picked out another good one. Look at this right here. Awesome. Here's the high, here's the low, here's where it was, here's where it is. Look at this. Up, down, up. Easy. I can get a third grader to trace that one. Up, down, up. 102.88, the 103s are going for 87 cents. Hell no. Oh, wait a minute. That says one day. No, we don't want that one. We don't want the 22nd. We want the 29th. Okay, look at it. 102.88. The closest one's going to be the 103. The 103 is going for 206. That's 2%. Do you have any idea what 2% a week is? 2% a week is over 100% per year. That's doubling your money every year. Okay, I like Micron. Let's take a deeper look. You ready? Sorry, the ginger tea helps my cough from talking too much. All right, I like the number. That works. Let's take a deeper dive into the chart. Let's push this over this way and take a better look. All right, so the high of the year is 157.54. That was in the mid of June. And the bottom of the year was a year ago, 71. Look at the last 90 days. Here's the last 90 days. High, low, was, is. Look at this. Up, down, up, down, up, down. That is clear as day. Up, look at that. Okay, another visitor over here. Araspa, 26. How are you today? Cool bean. Thank you for joining. So, this is the last 90 days, the 3 months. Okay? Up, down, up, down, up, down, up. Okay, great. Let's zoom in even closer and take a look at the last 30 days. What can we expect it to do next? Down, up, down, up, down, up. Hell yeah. Before we make any decisions, let's go to the seasonality. What does it normally do? Well, look at that right here. Here's the fourth quarter. Okay, January, February, March. First quarter. Uh-oh. What am I looking at? Right there. Nope. I need to zoom into this thing. All right, now we can see it. Okay, January, February, March, first quarter. April, May, June, second quarter. July, August, September, third quarter. October, November, December, fourth quarter. Here's where we are right here, the last of November. Goes up a little bit and then sideways for the rest of the year. So let's zoom into that. Right there. She's basically just going to go sideways with a very slight tilt the last couple of weeks. Well, great. Micron looks good. So let's do a quick trade on Micron. See what it sounds like and see what it looks like. So let's get rid of this. Now, remember, we liked it at 103 because right now it's at 122.88. The closest strike price is going to be the 103. Okay, so let's take a look at the 103. Change this to covered stock. The 103 right there. One contract right there. Market order because I want it to fill first thing in the morning. All right, here's what it sounds like. By one, covered call MU Micron 100s. Those are the weeklies. 29 November 24. That's next Friday. It means it expires at 4 o'clock next Friday. The 103 call option against the MU, the Micron stock, at the market to open. Okay. Maximum profit, 245. Where is it right there? Right there. 245.50. All right, so let's get my calculator out. And we're going to go 245.50 That's the maximum profit for one contract. 245.50. I want it simple, safe, predictable, and consistent. Predictable. Okay? Predictable. I want to know what I'm going to make. Well, it's right there. That's what I'm going to make before I even make the trade. Most people just buy a stock, wait for it to go up, and then sell. They have no real idea of what their exit strategy is. Well, this here, I already know what I'm making. I'm buying it at 102.88 and I'm selling it at 103, and I'm walking away with $245 for each contract I do. One contract, $245. 10 contracts, $2,450. All depends on what your budget looks like. I like a 1% return. So let's take a look at what the number looks like. $245.50 is my profit. Each contract is going to cost me $10,055. I mean, because I have to buy 100 shares of the stock to do one contract. So I'm going to divide that by $10,055. That gives me a grand total of 2.44%. Okay, 2.44% every single week for a whole year. What does that come to? Well, let's multiply it by 52 because there's 52 weeks in a year. That comes to a grand total of 126.9%. Tell me you don't like that number. Seriously. And then try to make me believe it. All right, so let's get back out of here. Let's get out of there. Let's get out of here. Let's go back to that, and let's go back to this. Okay, so that's Micron. I do like Micron. Jill, that's a good guess. I mean, that's a good pick, Jill. I'm actually going to write that one down for next week. All right, what's next? Shakita with the calendar. Okay. KG. So you fill your calendar with the stocks that qualify. Absolutely. Think about it. If you like a company, great. Put it into your calendar. It's going to show up 4 times. Well, hold on a second. Some companies, remember this, 9,753 companies, or 54, half of them pay dividends, the other half don't. Okay? Now, here's the thing. Some companies pay once a year. Some companies pay twice a year. Some companies pay 4 times a year. That's quarterly. That's most of them. Jessup, what's happening? What was I? Oh, most companies pay 4 times a year every quarter. That means if you like a company like IBM, 4 times a year is going to pop up. First quarter, January, February, March. Second quarter, April, May, June. Third quarter, July, August, September. Fourth quarter, October, November, December. 4 times a year. Some companies, just a few, pay every single month. So depending on when they pay, let's assume it pays 4 times a year. You take a good company, IBM, you put it into the calendar 4 times a year, it's going to have a dividend. It's going to pop up 4 times. Well, what are you going to do for the other 266 trading days? So you have 266 opportunities to make a 1%. All right. What if no non-qualifying with dividends in 2 weeks? It's a no. No dividends, no thank you. No weekly options, no thank you. I'm very strict with the stocks that I buy. You can put your money anywhere you want. Okay, there's a bunch of people here. You can pick anywhere you want to put your money. Anywhere you want. Me, personally, I want to make sure the company's consistently profitable because it doesn't make any sense to give my money to a loser. Sorry, I'm not calling them losers, but to me, if they're not consistently profitable, it's a no. It's actually that simple. If you don't have 20 years of consistent profits, you don't make my list. Terribly sorry. It's my money. I should be able to put my money wherever I choose. All right, that being said, let's keep on keeping on. You have a black eye. Oh, really? I didn't notice that. What time are your classes? You mean the morning classes? 9 a.m. every morning. This is a great lesson. Thank you for your time and effort. Ooh, Bajalsta? It looks Russian. Bajalsta. Everett, How often do you roll over your options? Ooh, Everett, that's an awesome question. Let me give you a little quote and tell me if you know who it came from. Ready? We cannot answer the questions of tomorrow with the knowledge we possess today. That was John F. Kennedy, by the way. So basically what I'm saying, you're asking me when do I roll over? Well, I can't answer that question because it's not 2 o'clock on a Friday afternoon. Because I buy all my stocks on a Monday. Tuesday, Wednesday, Thursday, I just look at them to see how they're doing. Kind of like babysitting. Friday, that is the important day. Because Friday, I want to see where my position currently is. Am I at a risk of losing? If so, what can I do to avoid a loss? I hate taking losses. Now, out of the 3 accounts that I share with you, I have one that has 0 losses all year. Okay, I have one that has 2 losses so far this year. And then I have one account that has 4 losses so far this year. Okay, I have about 6 accounts. I only share with 3 of them with you guys. Okay, I'm a nice guy, but I do draw the line somewhere. Okay, how often do I roll over? So Everett, how often do I roll over? It really depends on Friday. Okay, I'll take a look at my positions, see what they look like, and go from there. Big Marty, what stocks do you have written down for next week? I'm late to the show. Marty, you already asked me that question. So, and I already picked up my what do you call it? My you know, I'm getting old. I forget things. My notebook. Okay, this is what I have written down so far. That's this week. Okay, that's next week. That's the week after. And look at this. I only have one for 3 weeks. 3 weeks away. So every night I do this. Every night. Okay. I don't even know what day we're in. Okay, we're in 3rd week of November. That means we have 5 weeks left. Or is that 6 weeks left? 5 or 6 weeks left. Okay. I've been doing this show, since the beginning of January. I missed 5 days. That's it. Every single night, 9 p.m. I've missed 5 days. One day I was sick as a dog, just wasn't happening. Another day I had to take someone to the emergency room. They weren't doing so well. I had to go to the emergency room. 3 days lost to the hurricane. I don't know if you guys are aware of this, but I think it was a month or 2 ago, we had a hurricane come right over the house. The eye of the hurricane right over the house. I think it was like 3 days. No water, no electricity, no internet, no telephone. Didn't bother me a bit. I'm good. I'm Gen X. We could care less. You put us out in the woods, we're good to go. Didn't bother me a bit. But I couldn't trade. So I lost $2,000 that week because I couldn't get on to make a trade. All right. Misty's a big fat no. I know that one. Empty space is huge. Yes, it is. Misty's going to be a no. 86. Dude, about time you get here, man. Nice to see you, though. Make the question a video so we can save them. User 552509235763. Must be one hell of a roll call in school. It is 553627. Well, yeah. Why can't you just have a normal name like Peter, Jack, Fred, Oscar? Norberto. 1 year later, I have no idea what that means. VST. Norberto. VST. Uh-oh. VST. Hell no. Okay? I'm only saying hell no because look where it is. It's at the high of the year. If there's some reason that you can explain to me why you are buying a stock at the high of the year, I would love to hear why. You still said no. Yes, I know. Because it's at the high of the year. When have you ever heard anyone says, hey, I got a great stock. It's at the high of the year. You should buy it and wait for it to go higher. No, that doesn't work for me. I buy at the low and wait for it to go higher. See? Low, buy it here, sell it here. Buy it here, sell it here. Buy it here, sell it here. Thanks for the advice. You got it. All right, let's keep on going. Norbert, FTAI. Dude, I never heard of that. FTAI. Hell no. Again, why are you buying at the high of the year? Brother, come on. Okay, you don't make money buying high and waiting for it to go higher. LEU. LEU. Monthly. No. Okay, I don't do monthly options because the numbers just don't work for me. If they work for you, absolutely good for you. Okay, number one, I don't buy at the high of the year. Number two, I don't mess around with monthly options because they just don't work for me. What coin should I put? No, I don't do coins at all. When I says dividend stocks, that means dividend stocks, not coins. MRO, ooh, B-Man, Marathon, gotta love it. MRO, Marathon Oil. Oh, it is a weekly. Why is there only 2 weeks though? All right, well, next week, the 28.99s, the 29s, no. Okay, 28.99, the 29s, 13 cents. No, that's a 0.5%. No thanks. Norbert, it doesn't have weekly options, so it won't fit. Thanks, 86. Norbert, it doesn't. FTIA. Okay. Instrument FTIA has no options. Oh, AI, sorry. FTAI. Okay. Norbert, those are all monthlies. December, January, February, May, June, September, January. Yeah. Those are all monthlies. FTAI is a no. Sorry. Okay, Norbert, right there. See it? Okay, number one, it's the high of the year. No. Number two, it's monthly options. No, numbers just don't work. Let's keep on keeping on. MRO, we already did that one. Norbert, it needs to have weekly option for the strategy. Milo wants to take a look at BA. Anybody know that? Anybody? Bueller. BA, that is Boeing. Okay, check it out. Boeing, high of the year, the low of the year. Where was it? Where is it? Look at this. Up, down, up, down. It's bouncing right off of here, but is it really? 143.80. The 144s are going for 230. That works. Let's take a deeper look at the chart because the numbers work nicely. Okay, let's move this out of the way. Okay, a year ago, Boeing was at 218.91. The top of the year was in December, 268. Well, the bottom was just recently, on the 15th. That was last Friday. And that was 137.03. Look at this. Up, down, up, down, up. Uh-oh. She's coming back down again. Sorry, dude. That today blew the whole thing. 1, 2, 3, 4 days to the upside. Today it's going down. Why? What broker do I recommend? Go. Is that G? Go. I have one, boss. HWM. Okay, hold on a second. What broker do I recommend? I don't recommend anything. I make no recommendations whatsoever. I personally use Thinkorswim, okay? And I use Robinhood. Those are the two brokers that I use. Robinhood, simple, easy, right there at my fingertips, easy breezy. Okay? Thinkorswim, 15 years ago, I wrote a book on how to choose a broker, or what's the best stockbroker. Okay, I think it's available on Amazon. But I wrote it 15 years ago. Most of those platforms don't exist anymore. But I found this one 20 years ago. This has everything I want. I come from an age, and I was born in the 60s, 70s, 80s. I'm from that age group. Okay, we have a firm belief that if it ain't broke, don't fix it. So I've been using this for over 20 years, and it's all I use. And it's such a good platform. It used to belong to Tom Sosnos. Okay, he has Tasty Trades now. All right, he's the one who created it. He's a professional trader, and he created this. Cool beans. He sold it to TD Ameritrade, ungodly amount of money. I mean, you get a certain amount of money. What do you need more for? TD Ameritrade got bought out by Charles Schwab. So Charles Schwab owns it now. but I still trade on this trading platform. Okay, it traded 3 times. TOGI. TOGI. What the heck is TOGI? TOGI. I know what that is. That's a no. It's, oh, come on. That's a sub penny. What the hell are you doing to us? Seriously? Norbert. HWM. HWM. Okay, Norbert, dude, seriously? This is like the 4th stock you gave me that's a high. Why the hell you keep looking at stocks at the high? And it's a monthly. This is a double hell no. Sorry. I don't buy at the high, and I don't do monthly options. They just don't work for me. Okay? Sorry, Norbert. Hormel, we already looked at. MRO, we already looked at. But why? But why what? I have no idea. Zim? Zim's a no. I already know that one. What is so bad about monthly dividends? There's nothing wrong with monthly dividends. H-Stone doesn't have any weekly options or 20 years. Thank you for that, 86. Monthly option, yep, just doesn't work. Mountain Bike Mike, PSTG, never heard of it. Now, when I say I've never heard of it, we can all guess it's probably going to be a no. Are you ready? PSTG. Hell no. Sorry, dude. Monthly. Just doesn't work. Mike, I'm not quite sure what you don't understand about monthlies. No, thank you. Just doesn't work. CSBLS. What site do you look at to view dividends? I don't. Okay? What I look at, you ready? Dividend Kings. Dividend King is a company that has consistently increased its dividends for 5 decades or more. That's 50 years. Dennis Mancini wants to look at Pfizer. Dennis, hold up. We'll take a look at it in a little bit. Dividend Kings, 50 years of increased dividends. What's wrong with those? Dividend Aristocrats, 25 years of increased dividends. Dividend Champions, 25 years of increased dividends. A little bit looser on the rules than the Aristocrats. Dividend Contenders, 10 to 24 years of consistent increased dividends. That's all I use. Okay, and I throw in Warren Buffett's list too. CSBLS, Yahoo Finance. I have no idea what that means. Okay. CSBLS. No. Yes, Kellogg has a weird company name. Andrea, how are you today? Okay. Oh, Felix, how are you today? ExxonMobil, huh? XOM. Interesting. Okay, so ExxonMobil. Here's the high, here's the low, here's where it was, here's where it is. Look at this. Down, up, down, up, down, up, down, up. 122. The 122s are going for 124. That is well over 1%. Everything checks out. Well, let's take a deeper dive into the chart and see what we can see. Okay, the high of the year, 126. That was the beginning of October. The low of the year, 95.77. That was all the way back in the end of January. Look at this channel right here between, what is that, 110 and 119. It's a nice channel going sideways. Last 90 days, look at that pattern. Down, up, down, up, down, up, down, up. Well, we all know where it's going next. Let's zoom into the last 30 days to see if we have an idea of where she's gone. No, thank you. That was quick. Yeah, no. It went from a yes to a no pretty damn quick. Okay, down, up, down, up. It's currently at a 30-day high today. Yeah, ExxonMobil, look at all this space down here. Okay, your high's right there, your bottom's way down here. Yeah, no, it's too much real estate to the wrong direction. Mindy, first thing, DM me with your phone number. I'll give you a buzz. We'll chat, see if this is right for you. It's not right for everyone. It's slow, it's boring, it's monotonous. It is snail pace because it's a 1% per week. Okay, 10 to 15 minutes every day. Okay, 10 to 15 minutes. You're just changing your morning ritual. Okay, so get up 5 more minutes earlier, 10 minutes earlier. Sit in front of your computer. What did your stock do yesterday? How is that going to affect your position? I buy on Monday, I balance out on a Friday. Okay, am I going to be profitable this week? I don't know. I only buy good companies on Monday. What do they end up on Friday? I don't know. I'll find out on Friday. Rule number 1, never buy something you don't understand. If you don't understand it, don't buy it. Simple. Okay? If you don't know XOM, Exxon Mobil, okay? Of course you know who Exxon Mobil is. Well, you should. Okay? Exxon Mobil. If you like the company, great. Do you like it at this current price, $121.93? Well, look where it is. It is at the high of a 30-day period. What usually happens at the high of a 30-day period? Usually there's profit taking because your bottom is right here, 115. Well, now it's at 122. That's a $7 increase. $7 increase on a $110 stock, that's a 7% increase. 7% or 6%. Still over 1%. I'd still take my profits and run. What's the best company to do covered calls? Juan, ¿qué pasa, amigo? ¿Cómo está? I really couldn't tell you because I have no idea what you're looking for. Andrea, yes, the miners are paying big percentage. Yes, Andrea, we already took a look at the at Marathon. Okay, it's a too bit of a high at this moment in time. 86 just no, doesn't have a dividend. Cool. Cool. Double cool. Zim, no. I already know that one. Uh-oh. What am I missing? There's always someone who asks me about O. Okay? Seriously, dude, take a look at O. All right? Now, I'm asking you, because when I do this, nobody ever does it. You ready? Take a look at O. This is what I want you to look for. Number 1, does it have weekly options? Number 2, what is their consistency of increased dividends? Number 3, what is the current yield? If you take your money and put it into O, what is your current yield that you're gaining? Those 3 questions. Answer those 3 questions, and I will talk about O as long as you want. Now, usually when I say that, nobody ever does it because O is a big fat turd, in my humble opinion. Do all your other strategies rely on dividends? Kinda yes. Now, the reason why I'm saying that, Andrew, because stocks move for 2 reasons. Only 2 reasons. A known reason. That means we know why it's moving. Okay? We can predict what's going to happen. That's a known reason. It's like unknown reason. What's an unknown reason? Hurricane, flood, tornado, the earth opening up and swallowing everything, natural disasters, lawsuits, a death of a very important person, something that you cannot plan for. That is an unknown reason. Do you remember when the Exxon Valdez crashed in the Northwest? Nobody knew that was going to happen. What happened to the stock? Dropped like a rock. What happened when British Petroleum sprung a leak in the Gulf of Mexico? Stock dropped like a rock. What happened when Apple got sued and had to pay out a couple of $1 billion? Stock dropped like a rock. What happened when Steve Jobs died? Apple dropped like a unknown reason. You can't plan for it. You can only react. Now, a known reason: dividends, earnings, seasonality. What do I mean by seasonality? Winter, spring, summer, fall. Stocks react differently in the spring as they do in the summer or as they do in the winter because there are seasonal requirements. Okay, companies up north, they don't have the heaters on in June, July, and August. Okay, they do have the heaters on in November, December, January, February. Okay, that is a seasonal event that creates a disruption in the actual working of the daily ongoings of the business. Okay, why does Weight Watchers stock go up in the first week of the year? Why does Hershey's go up the first week of February? Certain stocks move predictably during the year. That's called seasonality. That's an event you can plan for. So yeah, everything rotates around dividends because a dividend, we know, creates a known event that causes the stock to increase in value. So if you know when a stock usually moves, okay, we cross-reference it with the calendar. Holy shit. Okay, yeah, look at this. These are all the companies paying out a dividend. Look at them all. Shitload. Pick one. Let's zoom into this a little bit by going. Here we go. By picking just a couple of stocks. Okay. Home Depot, right here. Take a look at that. Home Depot has a dividend right there. So we know when the dividend is. It's Home Depot. The company's been around for over 100 years. They've increased their dividends for more than 5 decades. So what does that tell us? Well, it tells us that just before this dividend date here, the stock is going to increase in value. Great. So when do we buy it? 2 weeks on a Monday, the 11th. That's when I buy it. If and only if the chart is telling me it's the right time to buy. Let's throw in Home Depot in here for a second. Home Depot, last 30 days. Okay, here's the high, here's the low. It goes up, it comes back down. Now she's going back up again. That's your answer right there. I used the dividend to tell me when the stock is going to move. It's predictable. You have the earnings report, not as predictable. Because a couple of weeks ago, Harley-Davidson beat the earnings. It had a positive earnings report. Stock went down. Estee Lauder had a positive earnings report. Stock went down. Okay, I don't rely on earnings reports, but I do like dividends because a dividend causes a stock to go up just before the dividend is paid. Also, after the dividend is paid, stocks go down. Yeah, yep. Consolidated Edison, yeah, it's been paying dividends for a long time. They've been in business for over 200 years. Their monthly optionable stock, they're a no. Kohl's, we already did O. I'm not dead yet. O? Yeah, O's a no, dude. Seriously, take a good look at O. Okay, before the cruise, I'm not dead yet. And I'm sure there's someone else out there. Who else is out there? Before the cruise? Yeah. Okay, so before the cruise and I'm not dead yet. Oh, here's one. Okay, number one, doesn't have weekly options. Number two, the dividends are horrible. No consistency whatsoever. No, they don't even have 20 years of dividends. And number three, check out the rate of return. The rate of return on O Realty okay, number one, let's take a look at the dividends. Goes all the way back to, what's that? All the way back, wow, all the way back to 2000. Okay, 98, 97, 96, 95. Okay, here we go. 1994. They've been paying dividends since 1994. So let's take a look. 7 cents in 94. 7 cents in 95. 8 cents in 95. 96. 97, 98, 99. Okay, 5 years, no increases. Okay, if they don't increase their dividends, means they're not being profitable. If the dividend is part of the profits that they give back to the shareholders, 5 years, no increases in profits. Already it's a no. But wait, it gets worse. It does. Okay, 99, 9 cents. 2000, 9 cents. 2001, 9 cents. 2002, 9 cents. 2003, 9 cents. Another 5 years, no dividend increases. Seriously? You still want me to look at O? But wait, it gets worse. Okay, 2003, 10 cents. 2004, 10 cents. All right, 2004, 11, 11. 2005, 11. 2006, 11. 3 years, no increases. 2006, 12. 2007, 12. Okay, 13, 14. Oh, wait. 14. 2008, 14. 2009, 14. 2010, 14. 2011, 14. 2012, 14. Another 5 years. First 5 years, no increase. Next 5 years, no increase. Next 5 years, no increase. So you get 15 years and they only increased 3 times. Explain to me in a manner in which I'll understand why you think, oh, realty, 15 years only increased 3 times? Really? All right, but wait. Believe it or not, it gets worse. Okay, 18, 2013, 2014. Oh, look at this. No dividends, no dividend, no dividend, no dividend, no dividend. 2014, okay, 2 years. 2015, 18. Okay, so 3 years, no increase. 2015 and 19. Okay, 16 is 20, 21. 2017, 2018. All right, increased 22, 23, 25, 26. Okay. Let me sum it up. 5 years, no increase. Next 5 years, no increase. Next 5 years, no increase. Next 3 years, no increase. So in 18 years, they increased 3 times. Explain to me why you think that's good. All right? Really. But wait, as crazy as you may think it may be, it gets worse. It does. Let's go over to the summary and see exactly what kind of rate of return O Realty is paying. Look at that, a whopping 5.5%. Now, why do you think 5.5% is better than 50%? If I'm getting 1% every single week, okay, hold that thought. Here's all my trades right here. All my trades for this year, going all the way back to week number 1. Oh, look over here. January 2nd, 2024. General Motors, Macy's, Ford, CVS. What did I make that week? Oh, 2.12%. Well, look over this one right here. Same week, second account. CVS, General Motors, Southwest Airlines, Comcast, and Ford. 2.99%. Okay? 2.43, 1.3, 0.85, 1.3, 2.7, 0.9, 1.6, 3.6, 1.06, 1.9, 2.57. Do you see where I'm getting at? Why would you possibly think 5.5% is better than that? Okay, let's go all the way down because this is the whole year. There's 52 weeks in a year. There's week 23, week 24, week 25, week 26, week 28, week 29, week 31, week 32, blah, 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 blah. Keep going, keep going, keep going, keep going. Currently, right here, account number 1, 82%. Account number 2, 69%. Account number 3, 30%. Now, account number 3 has only been on since July. July, August, September, October, November. 5 months. Okay? 30%, 5 months. And you possibly think 5.5 is good? But wait. Crazy as it may be, it gets worse. Okay, so let's go way over here. Let's trade this to that, and let's put O Realty right there. And could that be a monthly optionable stock? Even if I did monthly options and collected the premiums, the dividends. Okay, monthly options, 1 trade per month. If I'm getting 1 or 2%, maximum I'm going to get is 12 to 24%. But you're not even doing options. Okay? If you put your money in O Realty, yeah, you get a dividend every month, but you're getting 5.5% return for the year. Okay? You don't have weekly options, so you can't do weekly options on it. O Realties, there's always somebody asking me about O Realty, and it proves to me that people just don't research where they're putting their money. You're putting your money into something that's paying the same as the federal government's bond yield. The bond yield is 5%, no risk at all. It is the safest investment in the world. U.S. government treasury bonds are the safest investment there is. They're paying 5% at the moment. And you're putting into O Realty, it's paying 5.5. Oh, you make an extra 0.5%. Big deal. But you, all right. No. Triple hell no on O Realty. Retracting Ed, yeah, I figured. Nike, ooh, let's take a look at Nike. All right, I'm just going to go through the question. I'm not going to look at anything anymore because we're getting close to the end. Royal Cruise Line. Hey, Nike, let's do Nike. Okay, because I actually have some Nike. Okay, high, low, where was it? Where is it? Look at this. Up, down, big drop, up, down. It might be bouncing off of this right here. Let's zoom into that. Whoops. Let's zoom into that. Yep, big drop right there. Yesterday is the 30-day bottom. Okay, and that was 72.71. Today's a little bit higher. Cool. I like 2 days to the upside. We're currently at 75.24. The closest one's going to be the 76. Not quite 1%. Oh, no. Sorry. But aren't you only looking at stocks with dividends in 2 weeks? Yes, but KG, I'm doing you guys a favor by looking at the stocks that you are asking me to take a look at. Dennis, Pfizer. Would you roll it, Nike? Yes, I would. Okay, I actually own some Nike. If I'm not hitting my target and I can roll it for a profit, yeah, I'll roll it. Okay, I don't like selling at a loss. Okay, out of everything I could possibly not do, selling it at a loss is my top. I don't want to sell at a loss. Pfizer. I told you I'd take a look at Pfizer, so let's take a look at that one. That's going to be the last one we're going to look at tonight. PFE Pfizer. Okay. High, a low. Where was it? Where is it? Look at this. Down, up, down. Currently at 25.09. The 25 is going for 40 cents. That's a yes. Let's take a closer look at the chart to see what shakes loose. Alrighty. Well, end of July, there's the high, 31.51. Just the other day, there's the bottom, 24.47. A year ago, we're at 30. She drops, retrace, drops again. Like last 90 days. Look at the last 90 days. Look at, isn't that pretty? Down, up, down, up, down, up, down, up, down, up, down, up, down. Where do you think it's going next? Look at the bottom was last Friday. 4 days to the upside. Nice. Nike looks pretty cool. But the last 30 days, here we go. Here's the last 30 days. Plain and simple. Look at that. 30 days goes to high. What happens? There's your profit taking. Profit taking. Your bottom was right here on the 15th. 1, 2, 3, 4. Very slow going up. So where are we? 25.13. I can buy it at the 25. That's not good. Okay. I don't think anybody noticed this. See that? The last trade was 25.13. The bid, 25.08. The ask, 25.09. Both the bid and the ask are lower than the last traded price. And only a few of you here know what that means. Well, when bid and the ask are lower than the last traded price, the market maker is going to push it down tomorrow. Alrighty. What else we got? Who beat you up? I'm not going to say that. I was playing soccer and I play a little bit on the rough side. I'm 60 years old. Most of the guys on the field are in their 20s and early 30s. So I'm the old man on the field. Yeah, I get beat up by the other guys. Don't sleep on load. Nope, won't do that. Okay, none your business. ET. Okay, yeah. Eastern Standard Time. Yep. Hi, what do you think about... Oh, my God. Before the cruise. Dude, you definitely not listen. Okay, before the cruise, O is a no. Carnival Cruise Line, we can take a look at it tomorrow. Amazon, no. Google, no. Simple thing. Amazon, no dividends, no thank you. Google, they have dividends. 2 of them. That's it. I will look at Google in 19 and a half years. Google will make my list. 2 ways Google's going to make my list. 1, 19 and a half years. 2, if Warren Buffett starts buying it. Are you not looking at TikTok? Nope. All right, Aaron Wolf, Zeta. I have no idea what that means. Zeta Global. Okay, well, it's 11:27. We got 3 minutes. I want to go through the rest of these questions. I'll have to do it tomorrow. Scotty, NVIDIA? Seriously, dude, do you even check the numbers, or are you just jumping on the bandwagon with everybody else? There's nothing wrong with jumping on the bandwagon. I mean, somebody's got to lose their money somewhere. The only reason I say that. Okay, before the cruise, dude, I heard you like 7 times ask me to take a look at O Realty. And I gave you like a dozen reasons why O Realty is a big lemon, in my humble opinion. So your account is with Charles Schwab. Yeah, I already said that. Macy's, Kohl's, and Walgreens are shaping up to be good in a week or so ahead of their EX. Yep, absolutely. Okay, Scotty Fish, NVIDIA. Let me ask you a question. NVIDIA stock pays 1 cent for a dividend. So explain to me, a company that pays 1 cent for a dividend, how can they increase their dividends for 20 consecutive years if their current dividend is 1 penny? Okay, that's number 1. Number 2, NVIDIA's book value. You have any idea what book value means? That means if they sold every single thing that they own and paid off all their investors, you would get a whopping, are you ready for this? $2 a share. That's it. NVIDIA is worth $2 a share, and they pay out 1 cent dividend. That is a hell no. Orchard Island, okay, we're a little bit past, what do you call that? 11:30? Actually, it's 11:30 now. Yeah, so no. I love Dory, or the platform can be connected to any broker. That I don't think so, because this platform here, okay, Think or Swim, it's owned by Charles Schwab. KLAC, we're going to have to check that tomorrow. Before the cruise line, I've asked you like 10 times, and I've told you like 8 times. O is a big fat no. How many more times do you want to hear it? You ask me 10 more times, and I'll tell you 10 more times. O is a no. You seriously do not check. You don't do any research at all. Okay, just because they pay a dividend every single month, that doesn't mean squat. You're getting 5.5% return for the year. Okay? Does that make any sense? You're investing in O Realty. O Realty gives you a monthly dividend. Great. Whoopee deal. Big cool. Okay? The Italian lottery, $1 million. Easy to win. You get $1 million, $1 a year for 1,000,000 years. What good is that? AND, we'll have to check it tomorrow. AMD's a no. SoundHound is a no. Club Med Tom, when a call is being rolled over, is it next Friday, and how do you choose to strike? All right, Club Med Tom. Now, you've been here long enough to know that I take a look at what I bought it for. Okay, okay. Monday, I buy it. Friday, where's the stock at? Where's the option at? Okay, what does it look like this week coming to what is it, 4 o'clock on Friday afternoon? Great, I don't want to lose any money, good. What options do I have to move it forward to next week so they don't lose anything? Okay, those are questions I ask at 2 o'clock on a Friday. Okay, it used to be 3 o'clock, but we get so many people in the trading group now, we got to go an hour earlier. So I want it at 2 o'clock on a Friday just to make sure. Okay, okay, dude, I'm just deleting you. I just like don't want to hear from you again. It's like you just don't get it. O is a big fat no. You asked me like 20 times. And 20 times I said no to O. Yet you keep asking. I have no idea what part, no, don't you understand? O is a big fat 0. No, I don't like it. It's a monthly, no. The dividends are not consistently profitable. That's a no. Okay? And the rate of return you're getting on a yearly basis is 5.5. How can you possibly think 5.5 is better than 50%? Boggles my mind. O's a no. Yeah, so Club Med Tom always comes down to Friday. And then it's always a numbers game. What did I buy it at? What's that now? What did I sell the option for? What is it at now? Okay? Am I in jeopardy of losing? If so, what can I do so that I don't lose any money? And do I roll it forward? And if so, am I rolling it forward for 1 week, 2 weeks, 7 weeks, 12 weeks? I don't know. I don't want to lose any money, and I don't want to part with any money. All those questions are answered at 2 o'clock on a Friday because we have no idea what's going to happen tomorrow morning. We have no idea what's going to happen between tomorrow morning and 2 o'clock tomorrow afternoon. So we jump on, we take a look, what's going on. KLAC, we're going to take a look at it tomorrow. Mr. VIP, what's a 1000X coin? Dude, I don't do coins. My dad is putting a lot of money into that one. Oh, I feel bad for your dad then. How's XRP? Don't know, don't care. It's not on my list. Best for the systems by far. Flash Frozen, how are you today? Thank you. Cool to see you on a tractor. Okay. KLAC, cool beans. What looks like a good cash secured put for next week? Kent, I show you one trading strategy and only one. I don't do cash secured puts here. Okay, I do a lot of different trading strategies, but only one here. Here's what I call a stair-step type scenario. Learn this one before you take anything else. I don't understand it all, but probably the best dividend lesson ever summarized on O. I love Dory. I don't know why you don't understand that, okay? Everything about O is a no, other than the fact they pay monthly. They pay monthly, which is great, which a lot of people like that. But your rate of return is horrible. What do I think about IBIO stocks? Hell no. Michael David Robinson, dude. You know, I was going to call you and think, what do you think about the idea of flying to Vegas? You know, fly on over to Tampa, come pick me up, and we'll fly to Vegas next week or the week after. What top 10 stocks that you recommend? I don't recommend anything for beginners. I don't recommend anything. Hell no, Flash Frozen. That was kind of funny. All right. 3 months cough. Flash Frozen. No, dude. I've had this cough for like 2 years. I have what's called post-nasal drip syndrome. Okay? Now, I'm stubborn as a freaking mule. I don't take pills. I would rather cough and puke all the time than take a pill. Sorry. Something about those side effects doesn't thrill me. Okay, so postnasal drip syndrome is where you have that phlegm that slowly goes from your nasals down and sticks right there. And it makes you cough. Try to loosen it up. But what does it do? Just comes back and settles right back down there again. Yeah. So the ginger tea and honey helps a lot. Double A Captain 1. Okay, you want to know about my trading group? Well, here's the thing. I have a morning trading group. We meet every morning, 9 a.m. Eastern Standard Time. Okay. Now, I told you I have 6 different accounts. I share 3 of them with you. 1, 2, and 3. Well, this one I got booted off tonight because they do an update, and every once in a while you have to. Okay. And every once in a while you have to update. So with my morning trading group, we jump in 9 o'clock every morning, Monday, Tuesday, Wednesday, Thursday. We do all our trading on Monday, Tuesday, Wednesday, Thursday. Not a whole heck of a lot happens, but we do take a look at what's going on just to get an idea of how are we prepared for Friday. Because Friday, all the options expire. Because remember, we're looking for weekly cash flow. We only do dividend stocks with weekly options. Okay, because we're looking for that 1% every single week. So Friday we jump on at 2. We want to see what did we buy, what did we sell, where is it going, and how can we make sure we do not lose any money. That's decided on Friday. Okay, so if you want to join the morning trading group, that's right here. Okay, the 10-minute trader. Whoops. Okay, the10minutetrader.com. That's my website. You can click on there. This right here, Trading Live Online. That will bring you to my Patreon, which is Dividend Stock Talk. Okay, that's where you join for that if you're interested in that. Let's get back to where I was. Is this Jay Leno? Yes, it is. Okay. Tell me about your trading group. Already did. Laugh. You are too much, man. Smiles for you. Thank you for that. Uh-oh. What does he have to say? Smile. Smiles for you. That's funny. What about O? Yeah, you know what you can do. Brian, sheesh. Doge? No. That Dodge. El Fatso? Fatos. Is that Fatso? Anyway, Dodge. I have a Dodge. Isn't that funny? Tell you about your trading group. Already did. Captain, the link in the bio. Thank you, Brian. Smiles for you. I just left Tampa now in Findlay, Ohio. Cool beans. Add some fresh thyme. It's a natural coffee. Cool. I'll have to remember that one. Add some fresh thyme. Ooh, that means I have to go get some fresh thyme. Okay, I am new to the trading group. Cassie! And I love it so far. This is the end of my first week. Cool beans. Very informative. Cool. Flipper! Dude, haven't heard from you in a while. James, I have been listening for a few days. You are a hell no everything. So what's a hell yes? Dude, you missed this. Like 6 of them tonight. 6 of them was the hell yeah. Okay, what was the yes tonight? AAP, NEE, KSS, MARA, MOS, Kava, Sticks, NEM, JWN, Target, MU. Ooh, there was a bunch of them. John, I know you decide specifically on Friday, but what parameters lead you to roll to next week? Oh, okay. What parameters? Okay. When you... Damn it. What parameters to lead me to roll? Okay. Let's say, hypothetically speaking, I buy a stock at 20 bucks. Okay, I sell a $20 option. I get my 1%. Great. Let's say, hypothetically, she closes on Friday at $19.99. Well, I roll that into the next week. Now I try to sell it again. Now, what happens when she drops down to 15 or 16? Because that does happen. So my original price is 20. Now the stock is at 15. All right, so I sell the 15. It's great. Now, before that option expires, the stock increases in value back to 18, 19, 20, 21. Now it's over what I paid for it, and it's over what option I sold. So now I'm in an interesting predicament. I have to pay to buy that back. I don't want to pay to buy it back. Stocks go up, stocks go down. So as the stock is going up, I'm rolling it forward to gain another 7 days and to increase the value of the premium being sold. By increasing the value of the premium being sold, it deters anyone from exercising the option. Because to exercise an option, you have to pay the premium and the strike price. So when you combine them together, is that higher or lower than the current stock? It gets a little confusing after a while. It's so much easier to see it as it's in progress. So it's all a numbers game. All right. So as the stock's going up, if my strike price I sold is lower than my initial entry point, yeah, I roll it forward until the stock goes up, turns around, comes back down again, and then I can get out of it. Make sense? Perfect explanation. Thanks. I also have PND syndrome. Oh, yeah. I feel your pain. Yeah, okay. But my doctor did give me this pill to take. And I took it for a little while, and it all disappeared. And I thought to myself, this goes against every fiber of my being. So I stopped taking it, and now I drink ginger tea. Actually, raw ginger, cut it up, and I put it in my tea, and with a little bit of honey, all natural stuff. And yeah, it takes care of the cough for the most part. Smiles for you, truck driver. Cool beans. Do I course correct on a Tuesday or Wednesday, or just stick to your guns and only commit to Monday or Friday? Nope. I love Dory. It's always, always the numbers game. Because you don't know. See, when I buy on Monday, I buy Monday morning. We have no idea what happens Monday afternoon. Midas Touch Trader. Dude, you're a little late. I'm getting ready to sign off, but I'm here every night, 9 p.m. until 11:30. I'm past my time frame. I'm just wrapping up, getting ready to say goodbye to everyone. That being said, you all have a great night. This is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks, show you how I do it. I don't make any recommendations. I don't tell anyone what to do. Hell no to Shiba. I don't do cryptocurrency. I don't do futures. I don't do Forex. I don't do smart trades or smart contracts, whatever those things are called. And I definitely don't do cryptocurrency. Okay? Nothing but pre-qualified dividend stocks. And those are companies that have consistently increased their dividends to their shareholders, that's you and me, for the past 2 decades. That's 20 years. Okay, out of the 9,753 companies out there, there's only about 300 that fit the bill. Okay, so I'm only looking at 2 or 3 stocks every week. That's all I buy. 2 or 3 stocks every week. I buy, sell, buy, sell, buy, sell. I have no desire to hold on to anything. The longest I've ever held anything is 9 months. And I didn't do it because I wanted to. I bought it, it dropped. I waited for it to come back up, and I did sell premiums against it as it dropped, as it's in the bottom, and then when it came up. And I finally made a profit off it after I got out. Thank you for your time, and rest your voice. Yeah. The funny thing is, earlier during the year, I had to limit my some of my broadcasts because I was almost close to losing my voice. All right, SB88, how are you today? I'm just getting ready to leave, dude. Terribly sorry you just got here. I do dividend stocks for weekly cash flow. I'm looking for a 1% every week. That's 50% per year. That's awesome. All right, thanks a lot. I really enjoyed your talk and learn. Have a good night. Will do. Hey, James, Mark. Ooh, Trader Kev, dude, you know I'm here from 9 until 11:30. I'm just getting ready to close up. So maybe tomorrow. None of your business? Catch you guys tomorrow. All have a nice day. I'll be out of here. And now the time is near, and so I face the final curtain. My friends, I'll say it clear. Come on, hit that button. I'll state my case.